Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Oil prices are tumbling today, and that's helped to reduce concern over hot inflation, at least here in the near term. Now, 2 p.m. on Wall Street. I'm Doug Krisner. Let's take a look at market action for you. WTI now below $83 a barrel. We're down more than 5%. Much of this story centers on demand destruction, especially in China. The megacity of Chengdu has extended a lockdown. But earlier in the day, oil prices breached a key bearish technical level, and that seemed to accelerate a lot of the declines that we are seeing at the moment. Now, this drop in oil has in turn allowed yields across the U.S. Treasury curve to drift lower. We've got a 10-year now down nearly 10 basis points at 325. On the shorter end of the curve, a 2-year down nearly 6 basis points to 344. Now, those lower yields in turn have lifted equities. Right now, the S&P 500 better by about 1.5%. Of the 11 industry groups within the S&P, only one negative. Energy, which is down as a group about 1.2%. A lot of positivity in utility, consumer discretionary, and material shares. We've got the Dow higher by about 1.3%, and in the NASDAQ market, the composite index is up about 1.6%. We're going to hear from a number of Fed officials this week before their blackout period begins ahead of the September policy meeting. A short while ago, Fed Vice Chair Lael Brainerd said the Fed will have to raise interest rates to restrictive levels and keep them there for some time. That's pretty much what we heard last month from Chair Jay Powell at the Jackson Hole Symposium. Shares in Apple right now better by about 0.7%. Yes, the company has unveiled the iPhone 14 line along with a fresh slate of smartwatches and some new AirPods. And we also have a recovery in many of the Chinese ADRs that trade with respect to electric vehicles. NIO shares right now higher by about 2%. We'll take another look at market action for you in 15 minutes. I'm Doug Krisner. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio in New York to our audience around the world on radio, on YouTube, on SiriusXM. It's Bloomberg Business Week, Wednesday, September 7th, 2022. I'm Tim Stenovic. Carol Masser is out today. Katie Greifeld is in. You know her from ETF IQ and from Bloomberg News, where she's a senior reporter. Lots happening. You heard just now from Doug Krisner. Some of those beige book headlines, they continue to roll in. U.S. households continue to trade down, according to the anecdotal data from the Federal Reserve of the United States. We're going to have more on that in just a second, of course, with Kathleen Hayes, and more there, too. Of course, also, it's new iPhone Day. Happy day to those who celebrate. We check in with Emily Chang, who's on the ground in Cupertino with the latest. And from the magazine, it's been 5 years since Amazon bought Whole Foods, and it's still digesting it. And we talk crypto because it was a crypto winter this summer as Bitcoin nears its 2022 lows. The crypto market has now dropped below $1 trillion. Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Now let's get to the Market Drivers Report. And with us right now in the Bloomberg Interactive Brokers studio, it is a full house. We got Kathleen Hayes. She's Global Economics and Policy Editor for Bloomberg News. Also with us is Kriti Gupta, Markets Correspondent for Bloomberg. She's with us in the Bloomberg Interactive Brokers studio. Kathleen, you've had a chance to dive into some of these headlines right now that we're getting from the Beige Book. What sticks out to you?
Well, first of all, let's remember what the Beige Book is. About 4 to 6 weeks before every Federal Reserve meeting, each of the 12 district banks gets kind of an anecdotal report from academics, from businesses in their region. So that's what we're looking at.
Right, they go out and they interview business owners about
all
what
kinds
they're
of people, exactly. And then they put together this Beige Book. And what we're looking at is headlines from the summary, the sort of the synthesis of what they're saying. Here's my favorite headline, kind of like, duh, Fed. Price levels remained highly elevated.
Okay.
I think we sort of expected that one, right? The outlook for future growth remained generally weak. So they are concerned or maybe realizing that aggressive rate hikes are going to slow things things down, and there's other factors as well perhaps doing that. But employment rose at a modest to moderate pace. We saw 2 jobs reports in a row which were at least as strong as expected, if not more so, suggesting they have plenty of room to keep raising rates, steady consumer spending, economic activity unchanged on balance since July. Now, their first 75 basis point rate hike was in June, the second one in July, so not very too much fruit from that yet in terms of inflation. And of course, comments from a couple of other Fed officials today adding to the mix.
Well, let's talk about that because we heard from Lael Brainerd, for example, of course, the Fed vice chair, saying that the Fed's going to fight inflation for, quote, as long as it takes. Seems like more of the same. They've been really, really consistent.
Message on message, right? We're going to raise rates, and we're going to keep doing it until we see inflation not just peaking, folks, but starting to come down month by month sustainably. And policy will need to be restrictive for some time to provide confidence inflation's moving down to target. Once again, investors, it's not going to be enough for inflation to peak. And interesting too, Susan Collins is the president of the Federal Reserve Bank of Boston. She is one of the newer members, so now she's starting to speak out as well. Premature right now to be too specific about exactly the right policy move will be in September. 50 or 75, she's not willing to commit, but she's going to reiterate that we need to do more. So more hikes, we don't know the amount yet. Probably that next CPI report, when's that out? In about a week or so?
Yeah, about a week.
Could determine
Wednesday is when we're going to hear.
7 days.
Yeah.
Wow.
How exciting.
Yeah,
I can hardly wait. Now, I am excited about the CPI report.
No,
Katie
me
asked me
too.
earlier if I was excited about the beige book. Definitely excited about inflation.
Okay, well, speaking of excited, I know that the markets are actually kind of excited after these beige book headlines. The S&P 500 and the NASDAQ 100 both reaching session highs after this beige book report. Kriti Gupta's had her eyes on the markets all day today. Go back, though, before these headlines came out. Why are we seeing a surge in today?
You know, it's interesting. The way I like to look at the stock market is it's kind of like a spring. Every time you push it lower and lower, it just kind of bounces back because you see so much selling pressure. And I think we saw that yesterday as well. You did see some selling, and a lot of it was high volume, high volatility. The story today comes back down to the dollar. So yes, you are seeing these headlines from Lael Brainerd, as you pointed out, and of course the beige book as well, which, by the way, I thought the beige book headlines were quite interesting, as Kathleen pointed out. The fact that consumer spending is still strong and unemployment rose at the same time, that's the best of both worlds for the equity market. So it kind of makes sense that they're ticking higher at the moment. But the real legs in this rally came when the dollar turned around. And to me, I think that's the story here, specifically because the dollar was at record highs, all-time record highs earlier in the session, and the stock market was not. The stock market was barely higher and completely unchanged. When the dollar story turned around, that's when the stock market really kind of found its mojo. And to me, I think the biggest market move here, yes, it's the dollar, yes, the stock market, it's really crude. You're looking at Brent crude at an 88 handle, which is something we haven't seen in months. When you're positive about the economy, when you're positive about risk assets, oil should be higher because it means higher demand, higher economic activity, and you can really see baked into this market are those fears that are still hanging in the background.
Let's just bring in somebody else, though, China.
Yeah.
When I saw the headlines on exports and imports, sure, exports weakened incredibly month over month in August from 18% down to 7%. That's a big move down for Chinese exports, and they're making their economy balance, but they still depend a lot on exports. But the imports, what was it? The iron ore imports were down more than 3% year on year. Oil imports, crude oil down about 4.7. When you see that kind of demand pulling away, don't you think that's sending us a message? The commodities market people have been wondering, if China's slowing down, what is it going to mean? They're not going to be buying as much stuff to put into production and more. So I think that's a factor for the energy market today as well.
And the growth picture in China is just, it's scary. They're supposed to be the fastest growing economy. It was the fastest growing major economy in 2020, right? And now it's really losing its momentum.
You know what we didn't talk about?
What? Is there anything that matters?
We didn't talk about bonds, man.
Ooh.
The 10-year yield, it's down 10 basis points. That feels like a huge move as well. A lot of big moves today. I guess there's a narrative arc there. But
well, I think that's going to be huge for the yen tonight, because that's the thing, one of the main drivers of the yen getting crushed again, and people, these sellers testing the BOJ. And by the way, BOJ is not going to move there. That's obvious. But I think that's been the big factor the past few days. Seeing that, especially seeing the short end, the 2-year note yield go up as you guys help watch it so closely. That's been a big factor against the yen.
All right, a big thank you to Kathleen Hayes, Global Economics and Policy Editor for Bloomberg News. Also, Kriti Gupta, Markets Correspondent here, both with us in the Bloomberg Interactive Brokers Studio. Let's go from New York City to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Former White House strategist Steve Bannon plans to surrender tomorrow to face criminal charges in New York. Sources tell us this is over an ongoing investigation into whether Bannon defrauded donors to We Build the Wall, which was a private sector effort to support former President Trump's campaign promise to build a wall along the Mexican border. Bloomberg Government's Emily Wilkins has more.
Bannon was charged in federal fraud court in 2020 over this, but Trump pardoned him before he left the White House. That, of course, however, does not cover state investigations.
Bloomberg Government's Emily Wilkins reports sources are not saying what the charges against Bannon will be, only that he's been indicted by the Manhattan District Attorney's Office. A new report says among the documents seized by the FBI during their search of former President Trump's Florida home was one concerning a foreign government's nuclear capabilities. The Washington Post reports it was found during the court-approved search on August 8th. Joseph Cirincione is a nuclear weapons expert and says this raises alarms.
If there was a document of this level that I needed to store, it would be in a locked safe. And if I had to transfer it to somebody, a special courier would have to come and take it and put it in a locked bag to transport it.
Cirincione says the release of the document could jeopardize the ways and means the U.S. acquires such information. Forecasters say millions of Americans across at least 9 states can expect roasting hot temperatures again today, with possible records broken. Temperatures in some locations will be 30 degrees above normal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Hey, thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio. Katie in for Carol Masser this week. Not the whole week, though.
I'm off on Friday.
You get a day off on Friday?
I do. They're letting me take a day off. It's huge for me.
All right, Michael Regan is going to be in here.
Wow.
Yeah, exciting.
That's
We're
big
excited.
for you.
How are you doing? We haven't really, we haven't gotten a chance to connect today.
I'm good.
Okay.
How are you doing?
I'm doing well. Did you spend some time on Twitter this morning?
I'm
Maybe
actually
yesterday
on Twitter
too?
right now.
Okay.
I'm actually tweeting right now.
You're always on Twitter. Did you see these Michael Burry tweets?
You bet I saw these Michael Burry tweets. Michael Burry, of course. He was played by Christian Bale in the movie The Big Short. He wrote on Twitter that we may not have hit the bottom yet. Tim, this is a question that you've been asking for weeks now.
He didn't even say we may have not hit the bottom. He came out and said we have not hit the bottom.
There were no qualifications there.
No couching.
He said, watch for failures, then look for the bottom. And he pointed to the fact that in August alone, we saw 2 SPAC ETFs shutter, liquidate. So that's a bit of a sign of the times, at least in Michael Burry's view.
Yeah, we're actually going to be speaking to Emily Grafeo in just a few minutes. She's written about these 2 SPAC ETFs that were wiped out in 1 month. In the meantime, check out what else Michael Burry had to tweet about. He tweets under the handle, Michael J. Burry, but he calls himself Cassandra BC. He said, crypto crash check, meme crash check, SPAC crash check, inflation check, 2000 check, 2008 check, 2022 check.
So what does that mean, actually, this one?
I don't know.
Like, what's left to crash?
I was hoping you could help.
No, I
Do you think it's like tightening, monetary tightening?
I've DM'd him. He hasn't answered.
Did you really?
No, I'm just kidding.
Oh,
I haven't done that.
Now you
Maybe
have to
I
DM him.
should. Yeah, I don't think he follows me. But I mean, this is par for the course for Michael Burry. He's pretty bearish. We've known that for a while. So
you could just get in touch with him on the Bloomberg.
Is he green dot right now?
He's yellow dot right now.
Oh,
You can get in touch with him.
Well, I'll send him an IB for when he's back.
All right, check out this story and more on Bloomberg.com and on the Bloomberg terminal, and check out Michael Burry's tweets and Katie Greifeld's tweets over at Twitter. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market is very near session highs at the moment. We've got the S&P up about 1.5%. We'll take a closer look at that momentarily. We also heard from the Fed today, the latest beige book saying the U.S. economy, the growth prospects in the latest survey were somewhat weak, and that's also kind of agreed to or helped to contribute further to a slump. And price growth seemed to show some signs of decelerating. A short while ago, we heard from Fed Vice Chair Lael Brainerd saying the Fed may have to raise rates to restrictive levels and keep them there for some time. That's essentially what we heard last month from Fed Chair Jay Powell. We also got a sense today from the Wall Street Journal that Chair Powell's inflation-fighting pledge could tee up another 75 basis point rate hike rather than 50 basis points. We'll take another look at market action for you in 15 minutes.
Insight on what to watch ahead of the U.S. market close starts right now.
Welcome to the Kickoff to the Close on this Wednesday afternoon. Tim Stenevec along with Katie Greifeld in for Carol Masser. We welcome our TV colleagues, Romaine Bostic, Caroline Hyde, and Taylor Riggs, to walk our Bloomberg audience across TV, radio, and YouTube through what to watch as we head toward the closing bell. And we are actually finally seeing a little bit of green on the screen after those beige book headlines came out just at the top of the hour. We did see the S&P 500 reach session highs. It's just off of those session highs right now, up about 1.5%. The Dow Jones Industrial Average up 1.3%. The NASDAQ up 1.7%. And the Russell 2000 up 1.4%, Taylor.
Tim, love that you take us through sort of the highs of the session. I'm going to kick us off for exactly what we're watching as we count you down to that closing bell. For me, it's always about some of the cross asset, namely strong dollar in the face of a beige book, in the face of what we even heard from Lael Brainerd earlier today, talking about raising rates and staying there because we have to do whatever it takes to tackle inflation. So you're getting some strengthening of the dollar and some strengthening of the real yields. These, Romaine, are those tighter financial conditions.
Those are the tighter financial conditions. The question is, does any of this actually change the dynamics for the Fed? 75 basis points on the table at the meeting. Up ahead, we got 75 basis points higher by the Bank of Canada today. And, well, do I dare say it? Are we going to get 75 basis points out of the ECB?
You just said it.
No way.
Meanwhile, we're also watching what's going on in China. We're seeing lockdowns actually extended. So let's talk about the megacity of Chengdu. 21 million people. It's the capital of Sichuan province. It's the biggest city shut since that 2-month lockdown in Shanghai earlier this year. You've got that. You've got a property slump. You've got export growth slowing more than expected. Imports stagnating. Not good news for the Chinese economy. Check out what Fidelity International global macro economist Anna Stupnitska had to say earlier on Bloomberg TV.
This is just another shock hitting the global economy. And of course, from the China perspective, it's not surprising that growth is so weak because there is no consumption engine to drive growth. And also you have the slowdown
Connection
in the rest
lost.
of the world. And so you cannot grow just based on your exports. Growth is likely to remain slow until something turns.
That was Fidelity International global macroeconomist Anna Stupnitska earlier on Bloomberg TV, Taylor. The big question is, how can China actually grow if they continue to play this game of whack-a-mole with trying to eliminate COVID-19? I mean, essentially shutting down a city of 21 million people right now because of a few hundred cases.
I want to talk about that growth. Dare I bring it back to some of the FX, the sort of 11th straight day of the fixing of the yuan as the PBOC really tries, Caroline, to support the currency in the face of slowing exports, slowing imports. So as the world's second largest economy, indeed, you finally actually now have a central bank looking to step in as it sort of approaches that key 7 per dollar number.
Well, one central bank that might not need to step in quite so much is the Bank of England, Taylor. And in fact, we saw the pound absolutely tumble near the lowest since 1985. And we're seeing actually a serious move into bonds. Now, the yields that we see, the yield move on the downward movement that we saw, so money moving into UK gilts, yields fall. In fact, they fell at one point, the lowest since we saw in the Brexit vote, since 2016, about 25 basis points, an entire 0.25% shaved off borrowing costs over in the United Kingdom, as we thought maybe the Bank of England is now saying because of those price caps that we might see from the new leader of the UK, of course, Liz Truss, might that mean that inflation has indeed peaked in the UK? I'm not saying that the economic picture looks any prettier, Tim. We still have an awful lot of headwinds, but maybe peak inflation means time to be buying into bonds and indeed be selling that pound.
Maybe peak inflation, the key word there, maybe. I mean, we'll see what happens to energy prices come winter as things start to cool off in the UK a little bit, Katie.
Well, I want to go from the macro to the micro because the big individual company story today, of course, is the Apple event. We did get the iPhone 14 unveiling. That will run you $799. The iPhone 14 Plus will go for $899. And the headline, of course, is on the iPhone. But if you look at the iPhone share of Apple sales, it's actually been inching lower. Year to date, it's 53.5% of overall sales. That's down from 66% back in 2015.
Well, yeah, that's because they're making all their money selling you chargers and cords.
And I keep buying them.
Yeah, right. They just take it out of the box, and they'll just charge you for the box as well.
I want to know whether we're all going to be having that new island that they're promising us. What is that? I'm just going to...
It's the Notch Island. So you can
Notch Island. Notch Island. Apparently a whole new way to be using your iPhone 14, Romain.
All right. Well, you know what I've been looking at, actually? I was looking at a lot of the hedge fund flow data. Of course, we get the CFTC data, and now you have the data coming out of Goldman Sachs, Morgan Stanley, and some of the other banks here, basically showing that a lot of these hedge funds have actually started to really pick up a lot of individual stocks. There's been a lot of activity there with those trends, primarily with regards to buying technology and healthcare stocks. That would seem to be a good thing, but it's interesting. Some of those same banks are also saying that when they look at what their clients are doing, they're also hedging a lot of that risk using ETFs and other indexes as well. So the general attitude here is that they're willing to sort of pick up some bargains here and there, but they're still wary about the broader picture and hedging against that.
When you were gone...
Why are you laughing? Are you laughing?
Well, because Katie and I took over. We did a whole triple take on single stock ETFs. We parachuted Eric Balchunas in. Wild, Romain.
I remember that.
It was the best 30 minutes of my week, other than the actual ETF IQ.
Double whammy.
Yeah.
All right, we're going to have to leave it on that double whammy. That is going to do it for our cross-platform coverage.
Every day?
Every day. And you know what? If you're excited, we got another one coming up in just a few minutes. You're watching Bloomberg TV, you're listening to us on Bloomberg Radio, and you're watching on YouTube. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld. We are live in the Bloomberg Interactive Brokers studio. Katie, how about that new iPhone?
How about it?
You have an iPhone 5, you said?
It feels like it. It is small and it is slow and it has a cracked screen.
All right, so maybe you're one of the people who's ready for this new iPhone 14.
For $800?
That's where I have bad news for you.
No.
That's the starting price.
I don't.
Nobody pays $800 for an iPhone. That's like where it starts.
I certainly don't want to do that.
All right, we're going to have much more on the iPhone a little later. We're going to check in with Emily Chang, who's on the ground in Cupertino. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Kitty Greifeld in for Carol Nassar this afternoon. We were talking about Michael Burry's tweets from earlier today about how he tweeted about these SPAC ETFs that have been wiped out. We're going to be talking about those with Emily Grafeo. She's cross-asset reporter for Bloomberg News. First up, though, Doug Krisner is standing by with a look at the markets. Hey, Doug.
Hey, Tim. So we've got a rally underway. In fact, the S&P right now is very near its best level of the day. I think that it's fair to say that the driver of much of the price action that we're seeing is the collapse in oil prices. It's helped to reduce concern over hot inflation, at least here in the near term. WTI right now is below 82 the barrel. We're down more than 5.8%. Obviously, it's a story of demand destruction, right? Especially where China is concerned. At the same time today, the Fed's latest beige book says the U.S. economy's growth prospects were very weak in the latest period, and they're set to slump further over the next year. And price growth on top of that did show signs of decelerating. So we're seeing a move lower in yield across the curve. A 10-year Treasury down by more than 9 basis points right now at 3.25. On the shorter end, a 2-year is off nearly 6 basis points to 3.44. We've got the Dow ahead 1.4%. The S&P 500 rising nearly 1.7%. The NASDAQ Composite is up about 1.8%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, thank you so much, Doug Krisner. Joining us now to talk about those SPAC ETFs is Emily Grafeo. She is a cross-asset reporter for Bloomberg News. She's with us in studio, sitting to my left, which is thrilling because this is how we sit when we're actually at our desks. Let's talk about these SPAC ETFs. So we're talking about the Defiance Next Gen SPAC-derived ETF and the Morgan Creek Exos SPAC-originated ETF. Both shut last month. Why did it take so long? I feel like we've been talking about this SPAC downturn for a while now.
Yeah, well, we have. And there's actually still a lot of SPAC ETFs that are still trading, like a lot of ETFs in the market right now that are following these speculative areas of the market. Crypto, psychedelics, cannabis, and they're still on the market. But
all the fun stuff.
Yeah, all the fun stuff. And it's been doing pretty poorly. But these two SPAC ETFs, I think it's an interesting story of the Fed tightening of monetary policy, kind of giving a double whammy to SPAC ETFs, because on the one hand, you have this tightening that's not very good for speculative risk assets like an ETF that tracks a new industry. And then on the other hand, the tightening is drying up the liquidity that made the SPAC market thrive in the first place.
And so before they shut, it felt like they never really gained a lot of traction. If you look at the assets, if you look at the performance, for example.
Exactly. You're an ETF reporter. You're an expert ETF reporter.
Stop that.
So you know, I mean, even at the peak, the Defiance ETF was only about 112 million in assets, which isn't that large. And then it moved down to about 12 million when it actually liquidated in August.
Even though I'm not an ETF reporter, can I still be part of this conversation?
You can try.
Okay, I'll try.
Come on in.
What does it say about SPACs, though? I mean, we had Michael Burry talk about this a little earlier on Twitter. Katie and I talked about it. And
referencing Emily's story.
I know, that was pretty exciting.
That's pretty cool. Hey, that's really cool. Congratulations.
Thank you.
I mean, and Katie mentioned that it kind of, you know, symbolizes excess and frothiness in the market, whether we're talking about crypto. But SPACs are a little different because they're kind of cyclical, right? We've seen SPACs before.
Yeah.
2020 and 2021, that wasn't the first rodeo for SPACs.
Right, but it was probably the biggest rodeo for SPACs that we had seen. And it was all, again, about that Fed liquidity. So not only are we seeing these funds close up, given the fact that the liquidity is drying, but we also have regulators warning about scrutiny over SPACs. And so I was talking to a strategist who was saying, maybe these ETF issuers are just thinking this is not worth it anymore. We don't want to be involved in this space with the perhaps oncoming regulation for the SPAC space. But then again, there's so many crypto ETFs, like we were saying, that are still on the market. And of course, that space is not.
And they're all doing terribly.
Yeah, and there's regulation, you know, in that space as well.
I actually have a fun fact. You guys want to hear it?
Sure do.
So I was looking at the worst performing non-leveraged ETFs so far this year. The first one, the top worst performer, is a dry bulk shipping ETF. The next 9 are all crypto-related ETFs.
I thought they were like psilocybin. One of them was psilocybin.
Psychedelics?
Yeah.
No, that's also doing really poorly, but not as poorly, but still super bad.
Wow.
Yeah.
I didn't know the crypto ones. I mean, it makes sense, and we're going to talk about the crypto winter a little later.
Yeah. So you didn't read the story that I put out last week?
I have no excuse. I was going to say I had COVID, but
No, you
was
were
recovering.
fine.
Yeah.
Yeah.
No,
Moving
no
swiftly
excuse.
along. Let's go back to the ETF world. The 6.8 trillion U.S. ETF arena. You write that what we're seeing with these SPAC ETF closures, it's actually mirroring a broader pattern that we're seeing in the industry overall in terms of how young these firms were.
Yeah, so both of these ETFs that closed were less than 2 years old. And we've been tracking on the Bloomberg Cross Asset team the fact that in the ETF industry this year, almost half of the ETFs that have closed in 2022 were launched in 2020 or 2021. So we're seeing this trend of these newer funds launching and trading and then closing pretty soon after.
Did you guys, I'm sorry, I was like fixing my computer here and my microphone. Did you guys talk about the anti-SPAC ETFs?
Yeah, so actually we were talking about the ranking of different funds.
Yeah.
And I was looking at the best performing active equity ETFs in the US.
I love all the nuances there.
I know, you had to really streamline it down. But one of them is a ETF that shorts SPACs.
This is the AXS short D-SPAC daily ETF.
So that one's doing really well.
How well?
SOGU is the ticker.
I want to give it a number. I think it's more than 50%.
It feels like anecdotally a lot, and we could put numbers to this, but it feels like a lot of the short ETFs are doing well because if you think of the short Cathie Wood ETF, the short innovation ETF, that's also one of the blockbuster hits of this year.
Yeah, and they're both from Axis, which is pretty impressive for a newer, more indie ETF issuer.
And we're talking about fund closures here, but we know that fund ETF launches have actually been really, really robust this year.
Yeah, so that's another, the fund closures and these new funds, it might not be all that bad that we're seeing so many new funds close because in the last 2 years, we've seen so many new ETFs launch. So just the sheer volume of products out on the market means that there's more funds that are bound to close up as well.
Yeah, it almost feels as if maybe we are actually nearing the point where there is an ETF for everything.
Yeah, I think there is. I'm still tracking that breakfast one that I wrote about in January.
What was that one?
It was breakfast commodities. It was
like
so
orange
much fun
juice,
to
it was
write about.
cattle, it was pork.
Hogs.
I mean, with inflation, it's probably gone up quite a bit, although you have seen some disinflation in that space as well.
Yeah, but it certainly is.
But
ETF
dry
for
bulk
everything.
shipping, not doing. It's down like 70-something%.
I wonder if people jumped in there after.
It was one of the
last
best
fall.
performing ETFs in 2021.
Okay, exactly. When shipping rates were just off the charts,
A real
right?
sign of the times.
All right. Emily Graffeo, cross-asset reporter for Bloomberg News, with us in the Bloomberg Interactive Broker Studio. Check out her latest, well, it's actually not even her latest story. She's got another one in there. She's very busy. 2 SPAC ETFs wiped out in 1 month. Signal the boom is truly over. Check it out on the Bloomberg terminal. And, of course, more of her work at Bloomberg.com. Let's get to Washington, D.C. now for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. A tradition has returned to the White House. Today, Barack and Michelle Obama were back at the residence for the unveiling of their official White House portraits.
President and Dr. Biden, Vice President Harris, and Second Gentleman Emhoff, thank you so much for your hospitality. Thanks for letting us invite a few friends to the White House. We will try not to tear up the place.
The portraits of the Obamas will likely be placed in the cross hall of the White House, which is where the latest sets are usually displayed. The Democrats' new tax and climate spending law could make it easier to file your taxes online. Bloomberg's Nathan Hager has more on that.
The so-called Inflation Reduction Act includes a provision for the IRS to spend $15 million studying a free government-backed tax filing system. Democrats have complained for years about private corporations charging for the privilege of e-filing, with needy households feeling the brunt. Officials tell the Washington Post the IRS hasn't had the funding to seriously consider its own e-filing platform until now. Market research firm IBIS World says the commercial tax prep industry is worth $11.9 billion. The IRS says 9 in 10 individual tax returns were filed electronically last year. In Washington, I'm Nathan Hager, Bloomberg Radio.
A new Harris poll finds that more than half of Gen Z workers feel that working remotely makes it hard to make connections, with 55% believing they're missing out of the office culture. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Hey, thank you so much for that update, Nancy Lyons. Tim Stenivek and Katie Greifeld in for Carol Masser this afternoon. Katie, you got some bankruptcy news to talk about. This one's been in the works. If you've been following this story closely, Cineworld has filed for bankruptcy in a bid to cut $5 billion in debt. The company filed for bankruptcy in Texas in an effort to tame its $5 billion debt pile. It's a UK-based movie theater chain. It draws most of its revenue from the U.S. This after it bought Regal Cinemas back in 2018. It filed for Chapter 11 protection today. We should remind people Chapter 11 bankruptcy allows a company to continue operating while it works out a plan to repay creditors.
So Cineworld, it has commitments for $1.94 billion of bankruptcy financing lined up from existing secured lenders. That's according to a company statement. The company's management and board of directors will remain in control of the business, and the company expects to significantly slash that $5 billion debt load with the support of its lenders in Chapter 11, again, according to that company statement, Tim.
Yeah, in August, Cineworld surprised investors with an announcement that it was looking to restructure its balance sheet in a move that will likely result in very significant dilution of existing equity interests, end quote. Cambridge Partners, Eaton Vance, Invesco, and State Street are among Cineworld's largest creditors. The company did amass a heavy debt load after buying Regal. Its adjusted earnings before interest, tax, depreciation, and amortization were at just $455 billion the last financial year, according to its latest annual report. Hey, I want to put out a plug right now to check out the cover story from a couple weeks ago about Adam Aron, the CEO of AMC, and what he has been able to do at the company to get it through the pandemic. A lot of that, of course, had to do with robust interest from retail traders. I mean, it wouldn't have been possible.
Well, they issued shares, right?
Because the stock price was so high, they could do that.
Yeah, there you go. Of course, if you think about what theater chains have been dealing with, AMC, of course, getting a little bit of a windfall there. They've been struggling to recover from the COVID-19 slump amid a weak release schedule and stronger competition, of course, from streaming.
I should just play Top Gun Maverick over and over again.
I still haven't seen it.
Oh, it's really good.
I saw the original.
That's good.
It was fun.
The next one, it's very good.
Yeah.
Check out this story and more on Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have a rally underway in the equity market. The S&P 500 near session highs right now, up about 1.8%. The driver of much of today's price action is a collapse in oil prices. This has helped to reduce concern over super hot inflation, at least in the near term. Now, at the same time, the Fed's latest beige book saying the U.S. economy's growth prospects were weak in the latest period, and they are set to slump further over the next year. At the same time, the beige book cited price growth showing signs of decelerating. We have yields lower across the curve. A 10-year Treasury now at 3.26%. We're down nearly 9 basis points. And on the shorter end of the curve, a 2-year at 3.44% with a loss in yield terms of nearly 6 basis points. We've got the Dow higher by 1.5%. The S&P 500, as I mentioned, up 1.8%. NASDAQ comp rising by more than 2%. Shares in Apple right now better by 0.7%. As expected, the company has unveiled the iPhone 14 along with a fresh slate of smartwatches and some new AirPods. The iPhone 14 will have satellite connectivity for emergency texting and reaching emergency services, and Apple's partner in this effort is Globalstar. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. Well, in the current issue of Bloomberg Business Week magazine, catch it now. It's on newsstands, online, on the terminal, of course, as well, and then at Bloomberg.com/businessweek. There's an article about 5 years on. Amazon is still digesting that $13.7 billion Whole Foods takeover. The article, written by Matt Day, it's edited by Joshua Brustein. He is with us on the phone right now. Also with us is Joel Weber. He is the editor of Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker studio. Katie and I were talking about this a few minutes ago, Joel. It was sort of like the where were you when you heard moment.
There were so many jokes about getting avocado toast by drone.
I'm still waiting for that, the way.
By the way, that's another good Bloomberg Business Week story, is about the drones not materializing.
Drones.
But what's going on with John Mackey, the guy who
he's
did
gone.
it all?
He's gone.
Exactly. So what does that mean for Whole Foods?
Co-founder of Whole Foods. 5 years ago, Amazon went shopping for some produce and ended up with Whole Foods. and you know, I think the point of the story is 5 years on. What was it all about? And that was sort of, I think, what interested Matt. And you know, what, Josh, to just put it to you, what was it all about, and what does Amazon really have to show for it now? $13.7 billion for groceries is more than I usually spend.
Exactly. Yeah, I think 5 years ago, both Whole Foods and Amazon needed something. Whole Foods had built itself up into this really big player in the organic grocery market, and then everyone else kind of figured out that they could do the same thing. And so Whole Foods was really struggling to figure out what its second act would be. Investors were calling for a shakeup, and it was just having a lot of trouble in the public markets. Meanwhile, Amazon had really been trying to get into groceries and grocery delivery, and it thought, you know, buy this 500-store chain of grocery stores and really just really power up our own entry into the grocery market. And 5 years later, it doesn't seem like Whole Foods' problems have been solved. Its problems are still mostly the same. Amazon also has not taken over groceries, despite the fears that it would at that time. And it seems like we're largely kind of where we were, and not as much has happened as we would have thought.
Well, that's what I want to talk about. 5 years later, what does Amazon have to show with this purchase? What has Whole Foods actually added or subtracted from its bottom line?
So in terms of its bottom line, the answer is that this is one of the slower growing parts of Amazon's business. If you look at other aspects of Amazon's business, like cloud computing and sort of other real revenue drivers, those have been growing faster than the grocery business. And that business is also being, it's not just that groceries are growing slower, it's like they're not even growing as fast as competitors. So that just really hasn't taken off. They haven't figured out how to combine these two companies in a way that helps them compete in this specific market.
Okay, so one thing, though, that it has done is, you know, if you need to return Amazon products or, you know, get grocery pickups, there have been some some noteworthy enhancements that either the mergers help facilitate, or that maybe Amazon shoppers have gotten out of it? So what has been on the good side here?
Yeah, so I think the good side is that, Amazon does have a this large network of physical stores. As I said, there's about 500. And it has started to lean on Whole Foods, the expertise in there to help with Amazon Fresh, which is and it has started to lean on Whole Foods, the expertise in there to help with Amazon Fresh, which is its other chain of grocery outlets. And we haven't really seen the fruits of that yet, so to speak. But that could come in the future, that you could see if Amazon Fresh really does mature and turn into something really substantial for the company, that a lot of Whole Foods wisdom will have gone into the building of that product. It's just not quite there yet.
So we mentioned John Mackey. He was the co-founder of Whole Foods. He's moved on, retired as of September 1st. Who's in charge of Whole Foods within Amazon now?
Yeah, so he is being taken over by his former COO, former management consultant. Very kind of Mackey was known as an as sort of a really big personality, whereas his successor is less so.
Jason Bushell is his name. Yeah.
I'm sorry, Jason Bushell. Should have mentioned that. And his plan is kind of to take Whole Foods back to its roots, as he says, to try to get back to some of like the local produce offerings and doing things that makes Whole Foods kind of not feel like an Amazon, honestly, to feel like not you get the same experience everywhere, but you go and you know that your local Whole Foods has whatever the produce is, in your region.
Well, Joshua, that's been a big complaint for people who were sort of the diehard Whole Foods people before Amazon purchased the company. If you go back to, the roots of this company, it started in Austin, and it was kind of this like weird alternative grocery store, right? And even when it was a publicly traded company, it made a ton of acquisitions around the country, it still was unique because it had that local produce and it had that kind of hard to get stuff. And I'm wondering, it's funny, when this article came out, I saw people tweeting about it who didn't work at Bloomberg, and they were saying, yeah, Whole Foods, the experience of going to Whole Foods has changed too much since Amazon took it on. So, I don't go there anymore, is one of the tweets that I saw that tweeted out this story. How is Whole Foods physically different because of Amazon? Like, what's the experience like now?
Yeah, I think there's two things in there. The first that you mentioned about, the Whole Foods really feeling different and sort of losing that local feel is that was a complaint before the acquisition, and one that I think one of the problems that Whole Foods had, and it certainly hasn't been solved by Amazon, nor would it really. Like, that's not Amazon's strength. But to your question about what's physically different, Amazon has helped re-engineer Whole Foods stores a little bit to be, more focused on delivery. There's a lot of delivery pickers in the store, people mention, which I think some people really don't like. You're trying to shop and there's someone, there like clearly like filling up carts to move along, and they've had to dedicate some space that used to be cafes and somewhat for the physical infrastructure around the delivery business. So that, I think, has really changed in some of the stores in ways that, long-standing customers don't necessarily like. One other thing that's interesting is in terms of the actual technology, the biggest and most visible technology change since the Amazon acquisition.
Yeah.
You'd think it'd be drones or something like super high tech. It's actually just the self-checkout. Whole Foods had resisted doing that for a long time, despite the fact that other grocery chains had gone along with it. They thought it would feel impersonal.
Right.
Eventually, it just kind of became the standard, and so
self-checkout always takes longer than waiting in line, for me at least. Joshua Brustein is editor at Bloomberg Business. Joel Weber is the editor of Bloomberg Business Week, with us in the Bloomberg Interactive Broker Studio. Check out this story. It's in the current issue of Bloomberg Business Week magazine.
Down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left on your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs. We're joined now by our colleagues Tim Stenovic and Katie Greifeld. And as we do day in, day out, we go TV, radio, YouTube to discuss what is actually a reprieve, a bounce back, a maybe move in the dollar that answers it all.
Yeah, hey, and finally seen some green on the screen up there, and also seen some green when it comes to Apple. That's what I'm focused on because it's got its far-out event happening today in Cupertino, California, the first in-person event that the company has had for the iPhone in quite a long time since the pandemic. The iPhone is still going to cost you, and investors are pretty happy about it. Apple shares are up by close to 0.8%. It's underperforming the S&P 500, but it's not down, and typically Apple stock moves down on days when it launches this big product.
I like to imagine that you were describing the event as far out, but no, that is actually the name. But I want to go back.
It's because of the satellite technology.
Yeah, it's cute. It's cute. I want to go back to the dollar, though, because we've been talking a lot about dollar strength. The Bloomberg Dollar Index, of course, a little bit lower today. But what's been interesting about this bout of dollar strength is that a lot of it is coming against advanced economies. Usually it's the emerging market currencies that bear the brunt of the dollar strength. But as you can see with this chart, actually, the trade-weighted dollar index against advanced economy has soared 10% this year versus just 3.7% against EM currencies.
All about really the direction of the dollar that dictates trade on the day. I think we're looking at a overall session highs across the markets. S&P 500 now at 1.9%, let's call it. Volumes up about 8%, and we're up 72 points. So let's look at the Dow Jones Industrial Average up 1.5%. That's 474 points on the upside. The Nasdaq having a great day, up more than 2% as yields come spiraling lower, and the Russell 2000 also up 1.9%. Taylor.
And only 22 stocks in the red. So you really sort of see this bullishness on an individual sector, and you also really see that on sort of the individual security level as well. We can do it both in this next screen. Take a look at this. Pretty much everything in the green except for energy, which of course is the opposite of the story for the year. As crude falls, the energy sector falling along with it. But I want to take a look, Romain, at pretty much the top 8 to 10 sectors on that screen. 100% of the individual securities within those sectors are also green. So that's really showing you the breadth of this buying in this market.
Yeah, I was taking a look at the breadth a little bit earlier. I think this is kind of the broadest rally that we've seen going back to mid-July here. Some of that is attributable, of course, to some of the big cap tech names, including Apple, which Tim mentioned, United Airlines, and all the airlines really for a second straight day, getting a pretty nice bid on some relatively aggressive commentary by some of the executives there. United Airlines higher by about 5%. Coupa Software rallying about 17%. We talked yesterday about the idea that some of these software as a services companies, application software companies, really weren't doing well. They actually did come out with earnings, hit 23% growth on one of the main metrics here, a good forecast going forward that actually was raised above what analysts were expecting. So a little bit of optimism, at least for this one particular stock. No real love right now going on in the energy space as crude oil continues to fall. Halliburton, Chevron, the whole light's all moving lower, down about 3% here on the day. We get GameStop earnings coming after the bell. Meanwhile, the other meme stock out there, AMC getting a little bit of a bid, up 0.9%, despite the fact that you had Cineworld actually file for bankruptcy. Of course, they're based over there in London, but they operate the Regal chain here in the United States. And real quickly, guys, I do want to mention Snapchat. Those shares spiking just now, up about 8% or so right now. This apparently has to do with some commentary that the CEO is giving to The Verge, basically making some commentary here about the company's long-term growth prospects and their outlook going forward.
So far, 20% of your staff and aim to increase your revenue by 20%. It's a do more with less. Let's have a look at what we're doing in terms of the central bank policies right now, because in fact, we are coming off of our highs in terms of relative hawkishness for indeed what's priced in terms of rate hikes for the US. I'm looking at a white line here for our radio audience. There's still a 76% chance that at the next Fed meeting, so 21st September, we will see a 75 basis point rate hike. So we're still more than a majority thinking we'll get 75 basis points. We're still more than a majority who think 75 basis points for the ECB as soon as tomorrow, and the more than a majority who think the Bank of England will do the same. We're
I miss
all
these
about
charts with all the crazy lines that I can't really interpret. You know, I was listening to the show.
Can you describe it for radio, Romain?
For a few months. Well, I was listening to it one day in the car. I was on the way to a doctor's appointment. I was listening to it, and I just kind of visualized just how crazy it was. So it's like a Rorschach test. It could be whatever you want it to be.
Hey, I want to talk more energy. We heard Taylor and Romaine both mention it is under pressure today. In fact, we saw WTI fall to $85 a barrel for the first time since January. Gas prices have actually been down.
Right now, Tim. Down to 82 right now. It was actually down to 81.7.
Knocking on the door of 80.
I mean, and think about it. We're basically kind of getting near those year-to-date lows right now. I think it's right around 76, 77, and right now we're at the lowest since, I think.
Yeah, I mean, and I think we could have an entire conversation too about political implications of this as we head into the midterms. If voters are going to remember those high gas prices, or if they're going to go to the pump and see the Biden sticker that says I did this, and wait a second, gas is $2.80 a gallon.
Yeah, well, first of all, those stickers are ridiculous, and whoever does that needs to be arrested for vandalism. But I am curious because
you don't see them as much anymore.
I dare you to go look at gas prices and look at the differential between how far oil prices have come down and how far gas prices have come down. We all know that doesn't always, sink
85 straight days. You tweeted about this earlier.
Well, but but people still look at those elevated things. I mean, I go to the gas station pretty frequently, and it hasn't come down as much. So I think the voter psychology, it's like, it's
You don't have an EV?
Huh?
You don't have an EV?
Yeah, it's got a Rivian round back, don't worry.
I got a New York City. Hey, well, speaking of fossil fuels and gas, we did speak earlier in the day with Chevron CEO Mike Wirth. He was on Bloomberg TV earlier. He talked about production. Check out what he had to say.
Our production in the U.S. is up 7% first half of this year versus first half of last year. We intend to grow our Permian position from 700,000 barrels a day today to 1 million barrels a day in 2025. So that means we'll grow next year and the year after and the year after that.
Chevron CEO Mike Wirth saying that they're going to grow this year, next year, and the year after that. So the question is what does demand look like in those coming years when we see more supply come online?
Good point. When we think about the supply and the demand dynamics, we had a great energy analyst on around 2:30 in the TV sort of world over here, really talking about, at least today, the story has been demand. We've talked a lot about the numbers coming out of China, the slower exports, the slowing imports, and then sort of exporting that slower growth to the rest of the world when we think about the big exporter that China is.
Absolutely. It's such an important question about global growth. And to Tim's point, I mean, what does demand look like if we do enter that recession that we've been talking about for a few months now?
Romaine, I thought I heard you say something, Romaine.
Well, I was just going to give a little promo here for Alex Seal. Of course, did that interview earlier, and we're going to have the Devon COO on a little bit later on this program, along with Alex, who's out at that conference doing some great work.
All right, very cool. The energy conversation continues here on Bloomberg TV, on Bloomberg Radio. That is going to do it for our simulcast, though, on TV, radio, and YouTube. Do not worry, because in less than an hour, we are going to be back together for our Beyond the Bell coverage on Bloomberg TV and Bloomberg Radio. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser this afternoon. You want to talk about dollar strength a lot. This is something that you're really excited about.
I am interested. Again, I was a currencies reporter. For
Not when there was anything interesting happening in currencies, though.
Well, it's so funny. Actually, the dollar was extremely strong from the period that I was a currency reporter, about mid-2017 to the end of 2019.
Yeah, this is when Trump was essentially touting the strength of the dollar.
Yes, he was super proud of it. And I mean, people were talking about currency intervention back then, and you compare the strength of what was a very strong dollar back then to what we're seeing now. I mean, the dollar is so much magnitude stronger than it was back then.
It's got serious implications, not just for emerging markets, but the big story that you sent around earlier, which I really appreciated, was what it means for developing markets. You know, as other currencies are pushed lower, brings up the cost of imported goods, it feeds inflation, and it really sets a tall task for these central banks that are trying to get inflation under control.
And it's an interesting conversation to have when you think about sort of the dynamic of developed nations. They don't intervene in their currencies like EM central banks do. They do raise interest rates, the central banks. We have a big decision from the ECB tomorrow, that 75 basis point question. We got 75 basis points from the BOC, the Bank of Canada, today.
I'm so glad you mentioned that one.
I did.
I was just going to say the Bank of Canada.
Yeah. So you're dialed in. You're plugged in.
I got to prepare for the quiz every week, which you put together. Yeah.
Oh God. Yeah. 5 p.m. on Thursdays. But I mean, whether that's enough to actually sort of stem the weakness in these other G10 currencies, so far it hasn't been.
All right, we got much more, and we're going to talk currencies, too, a little bit later in the program. You're listening to Bloomberg Business Week. Let's get to world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. New concerns are being raised after a Washington Post report that a highly sensitive defense document was found during the August search of former President Trump's Mar-a-Lago home. Bloomberg's Washington correspondent Anne-Marie Hordern with details.
It says a document describing a foreign government's military defenses, including its nuclear capabilities, was found by FBI agents who searched former President Donald Trump's Mar-a-Lago residence and private club last month. According to people familiar with the matter, some of the seized documents detail top secret U.S. operations so closely guarded that many senior national security officials are kept in the dark about them. So we're talking about documents that the clearance levels, the president and maybe the cabinet.
That's Bloomberg's Anne-Marie Hordern reporting from Washington. Former Secretary of State Hillary Clinton was on ABC's The View today and was asked to comment on the discovery of top secret documents at Mar-a-Lago.
I don't understand how he was permitted to take them, even to the residence, let alone to a country club in Florida. I don't understand it.
Clinton came under scrutiny during her presidential campaign over emails which were initially believed to be classified. She was eventually cleared by then FBI Director James Comey. The Anti-Defamation League Center on Extremism says it pored over more than 38,000 names on a leaked Oath Keepers membership list and found the names of hundreds of U.S. law enforcement officers, elected officials, and military members. The Oath Keepers is a far-right extremist group that's accused of playing a key role in the January 6th assault on the Capitol. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stanivek and Katie Greifeld in for Carol Masser this afternoon. This was the first story I read this morning.
Tell me about it.
Okay, because everyone was tweeting about it.
Yeah.
When you wake up in the morning, you look at Twitter as like your first thing, right?
Absolutely. I was up from 1:30 to 2:30 this past morning. Would you call it the morning?
This morning you were?
Yeah, and I was just watching TikToks for an hour.
Yeah.
It was all about Don't Worry, Darling. Have you been following that?
No, but TikTok will do that to you.
TikTok will do that to you.
Yeah, I mean, the algorithm that they have is just Facebook and
I get a
Meta
lot of
platforms
Kardashian
and
content on my
Snap.
TikTok.
It needs to be worried because of how addictive this thing is.
Yeah, it's
we're
great.
seeing it, and we're seeing it play out. I mean, look what's happening to these companies. Hey, no good transition there from.
No, I feel
actually,
like
a great
there's one to
transition
make.
because you were talking about Kim Kardashian.
Yeah,
content
I was
and
trying to
TikTok.
tee you up.
Oh, thank you. Well, speaking of Kim Kardashian, she has started a private equity firm with a Carlyle partner.
This is bull market behavior.
It really is.
It really, she's swimming against the stream here. Yeah,
But she has had so much success.
Yeah, she's got cash to burn. She's the latest celebrity to try her hand at private equity. She's joining longtime Carlyle Group executive Jay Salmons to start a new firm, Sky Partners.
That's SKKY, yeah.
Yeah.
I think it's a reference to Skim, right? Doesn't she have the Skim brands?
Yeah.
And then they're launching that new skincare line as well.
You're on top.
Yeah, I
of
read
this
this story already.
That's cute.
Okay,
So-
Sky Partners is going to focus on investments in the consumer and media industry. There are a couple things that Kim Kardashian knows quite a bit about with her success, and I don't even know.
She's
Keeping up
revolutionary.
with the Kardashians.
When I had COVID,
Yeah?
I watched so much Kardashians.
Really?
Yeah, it was the perfect level of concentration. It was all I had to give. But in any case, of course, if you're a Kardashian fan, you know that Kris Jenner, her mother, is involved. She's going to be a partner at the firm, according to a statement. Of course, Kris Jenner is her manager, her momager, if you will.
Salmons worked at Carlyle for nearly 17 years. He was associated with investments including Beats by Dre and some skincare companies and more. Check out this story and more on the Bloomberg Terminal or at Bloomberg.com. You're listening to Bloomberg Business Week on Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We've got a rally in the equity market. The major measures now at session highs. Let's get the latest on the price action. Bill Maloney is at the Bloomberg Macro Squawk Desk. Hey, Bill.
And good afternoon, Doug. U.S. stocks with an aggressive bid today. The Dow's currently up 461 points. S&P's gained 74, while NASDAQ is higher by 2.25%. The U.S. 10-year yield at 3.26%. Gold is up 13. Oil is plunging, and Bitcoin is higher by 0.5%. Among the main 11 S&P sectors, only energy was in the red, and leaders to the upside in the Dow, 3M, Nike, and Home Depot, while Chevron led to the downside. In other news, Apple said at their event today the iPhone 14 will start at $799, and the Fed's Beige Book said the outlook for future growth remained generally weak. In the currency space, the pound fell to its weakest level against the U.S. dollar since 1985, and wrapping things up, GameStop reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug.
All right, Bill, thank you. To get live audio updates right on the Bloomberg terminal, the function is SQUA, then the green go key. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. So Apple's Far Out product launch event. We got a great live blog up from our colleagues who are on the ground there, including one Emily Chang. She's the host of Bloomberg Technology on Bloomberg TV. She's on site at Apple's iPhone 14 launch event that's happening in Cupertino, California. Some highlights include a new Apple Watch, some new AirPods, of course, the iPhone 14 as well. Emily joins us now live from Cupertino. So Emily, first of all, what's it like there? I mean, the first big iPhone unveiling since the pandemic. What's it like?
Yeah, we were inside the Steve Jobs Theater. I don't think I've been inside for 3 years. Given the pandemic, we did have an event earlier this year, but that was hosted outside. So it was nice to be inside, and they really played up that space theme with cool sort of AR video technology. And as you mentioned, we got some new iPhones.
All right, let's talk about these. We got the iPhone 14.
So lots to discuss.
Yeah, where do you want to start? I mean, typically, most important for the company's bottom line, obviously, is the iPhone. But to you, is that, and to customers, do you think that's the most exciting thing that was announced today?
I think it's still the iPhone. You know, even though the iPhone now accounts for only half of Apple's revenue, you don't buy an Apple Watch or AirPods unless you have an iPhone. So you kind of need that to drive all of these other revenue streams that Apple has concocted. And when you're looking at these new iPhones, we've got 2 new standard models in the iPhone 14 and 2 new Pro models, and better camera, longer battery life, thinner, lighter, faster, new chips in both of these new models. I think the most exciting thing, which is something that we thought we might hear about today, is the new satellite technology. So even if you buy that standard iPhone and you get lost somewhere with no cell connectivity, you can use satellite technology to connect with emergency services. And it sounds like this has been something that's been years in the making. They've been trying to perfect with hardware, software, and various infrastructure innovations to make it happen. And that's kind of a big deal. The other thing I would mention is the pricing. The iPhone 14, the new, most basic model, is priced the same as the iPhone 13 was last year. So if you think about inflation, you think about customers everywhere paying more for gas and groceries. Are they going to want to pay up for a new iPhone? That pricing could be a little bit more enticing than, let's say, if we saw a more significant jump. Across the board, more significant updates than we saw last year. So it might kickstart a bigger upgrade cycle than we saw in 2021.
Emily, I want to talk about the Apple Watch Ultra. Full disclosure, I'm wearing a Garmin right now. I love it. But Mark Gurman wrote in RT Live that the price is the big undercut to Garmin's pricing, that $799 price tag. Tell us more about the Apple Watch.
Huge undercut. Coming in at $799, I believe the Garmin, Katie, correct me if I'm wrong, priced at about $1,000 to $1,500
My husband bought
for
it,
the
I'm not
higher-end
sure.
model. Mark Gurman was thinking this might be priced at $900, maybe $1,000. So coming in at $800 is significantly lower than even we thought it would be. And certainly the way they're marketing this thing as your dive computer, it can go 40 meters below water. If you're scuba diving, it can track you anywhere you are. If you're marathoning through tall buildings or mountain biking through deep trees, this will follow you anywhere. You can retrace your steps. It has better health tracking technology as well. There are some women's health features that have been added to the new watches. So it's a really interesting proposition. I think it's going to be more of a niche market. It is a larger display, but certainly there's a market out there. Maybe the Katie Greifelds of the world or their husbands will buy it.
That's Joe.
His name is Joe.
That's Joe, if he's listening right now. Shout out to Joe.
Joe.
Emily, we only have a couple minutes left with you, but there are a lot of places I want to go. I want to talk privacy. Did you hear anything from Tim Cook or other Apple executives today about privacy? Because you mentioned some new features about women's health in there, and then, of course, all the tracking features that Apple has already built into the iPhone. And for years, Apple has talked about its privacy and safety features. It comes at a really contentious time, politically, too.
It's become sort of par for the course here, Tim. Whenever Apple announces these new features, we can track this and that, they always make sure to say in these amazing videos that they put together that, by the way, your data is protected and your data is safe with Apple, and you need to use two-factor authentication, for example, to access this and that data. And yeah, when you're talking about women's health data, when you're talking about menstruation tracking or ovulation tracking, which is what the new temperature sensors can do now, that's really personal information that you don't necessarily want anyone else to know. So they certainly played that up today, and as you say, it's one of Apple and Tim Cook's biggest selling points, that Apple is on your side and other big tech companies may not be.
Okay, Emily, we have 30 seconds left. My favorite thing to lose, because I lose them every time I buy them, AirPods. The new AirPods Pro, I've always argued they should be in the services category instead of a hardware category, because I treat them like a service with how much I buy them. Update there.
Totally. New AirPod Pro, more personal sound, also a better chip, longer battery life. But like you said, I'm not sure I'm going to buy them because I lose them all the time. Yes, I love my AirPods, but I can't hold on to them. So it'll be interesting to see what the market is for those.
Yeah, I'm keeping my older AirPods until I lose them for now. Hey, Emily Chang, you've got a special edition of Bloomberg Technology live from Apple's iPhone 14 launch event. Be sure to tune in, everyone, at 5 p.m. Wall Street time on Bloomberg TV. A lot of great guests lined up, and they're really digging into everything that happened today live from Cupertino. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Okay, I promised a few minutes ago that we'd continue talking about currencies. What I didn't specify was what type of currency, okay? We're not talking dollar strength here. We are talking crypto. To do that, we're going to be joined in just a few minutes by the managing editor for crypto here at Bloomberg, Stacey Marie Ishmael. Don't go anywhere because we got a couple great stories to chat about, including the decline that we're seeing in Bitcoin. We could be heading to those 2022 lows. Let's get over to Doug Krisner, though, because, Doug, we got less than a half hour to go.
That's right, Tim. And talk about declines. Look at the price of crude oil today. WTI was down 5.7% in the regular session, sub 82 the barrel, the lowest level that we have seen since about January 11th. And that has helped to reduce a lot of the concern over hot inflation, at least in the near term. This obviously is a story of demand destruction, especially where China is concerned. Some of the eco data that we had overnight for China was very, very dismal. Export growth slowing more than forecast, and imports barely grew as domestic demand struggled. We also had the Fed's Beige Book. U.S. economic growth prospects were weak in the latest period, and they are set to slump further over the next year. Look at the 10-year Treasury, down 8 basis points to 326. 2-year Treasury off 7 basis points to 343. And then in terms of the equity market action, we're at session highs right now. The S&P 500 up about 2%. The Dow's ahead more than 1.5%. And the NASDAQ composite climbing about 2.3%. The question, though, is whether this rally is more buy the dip rather than a sustainable uptrend. Some dollar weakness right now with the Bloomberg Dollar Spot Index down about 0.3%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. We're here with Stacey Marie Ishmael. She's managing editor for crypto here at Bloomberg News. She's with us in the Bloomberg Interactive Broker Studios. And I got to say, we're doing a little reminiscing. Katie brought it to our attention, Stacey, that today is your 1-year anniversary of being here at Bloomberg. And typically, you walk by people's desks here and they have these kind of cool little blocks that they put up if they've been here for like 10, 15, 25, 30 years. 1 year, not huge. However, in the context of crypto, a huge anniversary. And I should say not huge in the context of like, Katie thinks every anniversary is a big deal.
It's worth celebrating.
It is worth celebrating.
I love that attitude to life.
Happy anniversary.
Thank you. Thank you.
What is the last year, though? How do we describe the last year in crypto? Yeah, are you okay?
I'm great. I worry about other people who've had their, companies file for bankruptcy or lose access to all of their savings. The way that I have remembered the fact that September 7th is a big date is because it's also the 1-year anniversary of El Salvador starting to accept Bitcoin as legal tender.
Wow.
And I feel like I measured out most of my weeks, months, weekends in terms of what chaotic thing happened in the crypto market. So there was the weekend in which China was like, we think crypto transactions are illegal. There was the weekend in which, Celsius said that it was halting withdrawals, and just kind of on and on and on. And I think the highs and the lows of this market have been very interesting and perhaps more pronounced and more profound than people were expected going into September last year.
And if we think about September last year, we were on our way to what would be an all-time high for Bitcoin in November. That was around the launch of the first Bitcoin futures ETF, where you and I really got to know each other.
Yo, so much time.
That was fun. Bringing it forward to today, though, the big headline out is that the crypto market cap has dropped below $1 trillion. Sort of tell us how we got here and where we're going.
Sure. So, if we were having this conversation last November, we'd have been like, wow, crypto market value is above $3 trillion. We're flirting with 65. People were making prognostications about like 90K, 100K is in sight. And now, there's a meme that I saw on Twitter today that the 19,000 range in Twitter is looking like somebody's holding it together with duct tape and string. And that shift in sentiment seems to me to really do a good job of telling the story, which is that folks were very much betting on all things going up, which was also the problem at Three Arrows Capital. They blew themselves up because they were like, prices could never go down. And now we're at a point where prices have been hovering in this fairly tight range between, sort of 17.5 and 21, which is a frankly unusual lack of volatility for something like Bitcoin. And so I think the fact that we seem to be stuck here is again testimony to the fact that there isn't really anything pushing it significantly up, but also not anything pushing it significantly down.
So if the last year was characterized by a huge hedge fund that managed $10 billion blowing up, big layoffs at companies, FTX coming in and being
the hero, the savior.
Hero, yeah, the savior.
The white knight, if you will.
What does the next year look like?
One of the things that we've really been trying to look at is, I grew up in an era of financial reporting in which people cared about counterparty risk, and I feel like counterparty risk is super back. And the big question, or the series of questions that we're asking in crypto right now is like, okay, we know about the Celsiuses, the Voyagers, the Volds. Who are all of their counterparties? We know about these miners that are saying, they're dealing with liquidity challenges or other forms of financial distress, and they have different pools of energy that they might be providing. Who are their customers? And trying to sort of work down the chain of where do we expect different kinds of fallout. Simultaneous to that is we fully expect executive shakeups. And we've already started to see that happening, like CEO departures, whether voluntary or otherwise, CFOs deciding, you know what, I'm going to piece back out to JP Morgan where my life was a lot more chill. That kind of, this is a time of distress, and in a time of distress, senior executive and senior management teams are going to reorg in ways big and small.
Yeah, it feels like the crypto sphere is learning a lot of TradFi lessons
It's super
right now
TradFi.
when it comes to counterparty risk, collateralized lending, why that's a good idea. But I want to go back to the market cap question here, because obviously Bitcoin has gone down a lot, but Ether, there's actually a lot of optimism there. The Ether market cap has kind of been growing over the past few months, of course, as we lead up to the merge. Do you have any sense of whether this is going to turn into a sell the news sort of event?
Well, our colleague Valdana has written a series of very smart stories about the fact that options activity does suggest that there is 100% going to be a sell the news event, where we have folks positioning themselves for a great run. Congratulates everybody on the merge. We're out.
Great quarter, guys.
Well done. At the same time, though, you do have this. If there's any optimism in crypto right now, it seems to be concentrating around Ether and Ethereum and the merge, and the idea of, to use the jargon, the flippening, right? Like this idea that there could be a moment in which the market value of Ether overtakes that of Bitcoin. We are so far away from that being a practical reality, but that is at least something that folks have some degree of conviction in.
Perfect segue for me to tease your podcast, because in recent weeks, the flippening has been the subject of one of the episodes.
That is correct.
Make sure to check out Bloomberg Crypto. It's actually a daily podcast. So you're managing editor for crypto, and you also have a daily podcast. She does it all.
Indeed. Still here somehow.
Still here. Happy anniversary here at Bloomberg. Stacey Maria Ishmael, managing editor for crypto, the host of the Bloomberg Crypto podcast. You can catch that on iTunes. I don't call it iTunes anymore. The Apple Podcasts app, or wherever you get your podcasts. Tim Cook not happy with me right now, I'm sure. Really appreciate you joining us this afternoon, Stacey.
A pleasure.
This is Bloomberg Business Week on Bloomberg Radio. Let's get to Washington, D.C. now for an update on world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. The Obamas returned to the White House today to see the unveiling of their official portraits. Former President Barack Obama noted his photorealistic painting of him standing in a dark suit is by the artist Robert McCurdy.
You'll note that he refused to hide any of my gray hairs, refused my request to make my ears smaller. He also talked me out of wearing a tan suit, by the way.
Michelle Obama's portrait depicts her wearing a blue ball gown while seated on a sofa in the White House's Red Room. Her portrait was painted by Brooklyn-based artist Sharon Sprung. Steve Bannon, a longtime ally of former President Trump, says he expects to be charged soon in a state criminal case in New York. He's expected to turn himself in tomorrow. The indictment remains sealed, but there is speculation it involves a New York investigation of his fundraising efforts to build a border wall. He was pardoned by Trump on federal charges related to the operation. New York Governor Kathy Hochul says it is time to restore some normalcy to the city and ease one of the last remaining restrictions from the COVID-19 pandemic.
Department of Health will be issuing new guidance regarding masks based on the CDC guidance, and starting today, masks will be optional.
Hochul made the announcement shortly before getting her Omicron-targeted booster that's being made available this week. She says the new booster made it possible for the state to relax its masking requirements. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Well, you just heard it right there from Nancy Lyons in Washington, D.C. The New York governor has lifted mask mandates for New York City subways and shelters. We're talking about Kathy Hochul. She's lifted the state's mask requirement for public transit. It removes one of the last remaining government mandates of the COVID-19 pandemic. Katie, I still wear a mask on the subway.
That doesn't surprise me.
I don't think I will ever go back to not wearing a mask on the subway.
That's what my husband says. He's also someone who masks in the subway, but I don't know.
I want to meet this Joe, smart guy.
Yeah, he's great. I talk about him a lot. But in any case, Hochul announced the decision on Wednesday after months of confusion among commuters befuddled by varying national,
I wasn't
state.
confused.
It's been befuddling.
Literally on every bus that drives by in New York City, it says masks required.
Yeah, and then like no one is wearing a mask except maybe the driver.
And me.
And Tim in the back
When
of the
I'm on it.
bus.
Exactly.
But Hochul spoke during a press conference. She said that we haven't seen any spikes, and also people are getting back to work, back to school. We have to restore some normalcy to our lives. So I guess we're going to see those big yellow signs come down, Tim.
Well, no, they're going to change them around.
Okay,
So here's
fine.
what they're going to say. The big yellow signs are going to say masks are encouraged, but optional. Let's respect each other's choices. It's very similar to what you hear from airlines now. If you fly on airlines, since the mask requirement is no longer required, what the flight attendants will say, or the pilot will say, is that, please respect others' decisions to wear or not wear masks. Unfortunately, I haven't seen any conflicts on any of the flights that I've been on.
Have you been ridiculed for
No.
wearing a mask?
No, people leave me alone.
That's good.
They can see it in my eyes.
Yeah.
Yeah, leave me alone.
Don't mess with Tim Stenovic. But I mean, it's also in addition to mass transit, correctional facilities and shelters will no longer require masks. They will remain in effect, though, at adult care facilities as well as other health facilities regulated by the state, Tim.
Yeah, check out this story and more when it comes to our coverage of the recovery. We've talked a lot this week about banks bringing employees back. You can find all that coverage on the Bloomberg terminal and at Bloomberg.com. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
As we approach the top of the hour and the closing bell, we're looking at an equity market very near session highs. A lot of this has been driven by a big drop in the price of crude oil today. We've got WTI finishing the regular session below $82 a barrel. And that's helped to reduce a lot of concern over super hot inflation, at least in the near term. We had a story today on the Beige Book with indications that the American economy's growth prospects were weak in the latest period, and they are set to slump further over the next year. And at the same time, the Beige Book indicates that price growth showed signs of decelerating. So we're seeing a move lower across the Treasury curve in terms of yield. A 10-year now down about 9 basis points to 325, a 2-year at 343, with a loss there of about, let's call it 7 basis points. With that drop in yield, we have equities extending gains. The S&P right now is up about 2%. NASDAQ comp higher by 2.3%. Dow Industrial Average right now ahead by about 1.6%. Shares in Apple higher by 1.2%. The company did it today, unveiling that new iPhone 14, along with a fresh slate of smartwatches and new AirPods. Some dollar weakness right now with the Bloomberg Dollar Spot Index down 0.4%. The yen much weaker, 143.80, and a rally in the euro right now at parity with the greenback gaining about 1% against the dollar. I'm Doug Krisner, and that's your Bloomberg Business Flash.
Hey, thank you so much for that update, Doug Krisner. Really appreciate it. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. It's not every day that the International Atomic Energy Agency dispatches monitors looking like Hollywood action heroes, but that's an apt description of the IAEA team recently sent to inspect the Zaporizhzhia nuclear power plant in Ukraine, which Russia seized in March. It's Europe's largest nuclear reactor complex, and it sits right on the front line between the Ukrainian defenders and Russian invaders. The IAEA's goal is to avert a radiation disaster. Putin will never agree to unilaterally withdraw his troops and yield the plant to the Ukrainians, which would amount to retreat. So the goal of negotiations must be the creation of a demilitarized zone in and around the nuclear complex. Such a solution will be extremely difficult to achieve, but anything less could be disastrous. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Wow, it is already that time for the Drive to the Close. We got less than 10 minutes to go in trading on this September 7th, and we got ourselves a rally. We just heard it from Doug Krisner. The S&P 500 higher by 1.9%, the Dow higher by 1.5%, and the NASDAQ higher by 2.2%. Let's get into the technicals of this with Quincy Crosby, Chief Equity Strategist at LPL Financial. Quincy joining us this afternoon on the phone from Charlottesville, Virginia. Quincy, good to have you back with us. How are you?
Fine, thank you.
Well, it's really good to have you with us, especially on a day where we're seeing a rally like this, because I want to know from a technical analyst perspective what you're keeping an eye on. Because a few weeks ago, when we were talking about the rally that we saw, coming off of June, a lot of technical analysts were like, okay, this is retraced more than 50% of its lows, so this rally is good to go. But here we are, Wednesday, September 7th, and we are still down 16.5% for the year.
Well, exactly. I mean, technical analysis is very helpful, but you also have other factors for the market. And needless to say, this market is one that has attributes that are a little bit different than, for example, when the market just moved off of its lows in January 4th, 2019, when the Fed basically had a major pivot. So this market right now, today's market, what's nice to see is we're not seeing selling into it. We've had a couple of other days where the market started off in the green. There were catalysts for that, and yet the selling into it, the selling pressure was immense. This is still a trader's market. And if traders are losing money, they're going to find a pocket of strength in order to sell into it. And here we are just about at the close, and the market, I think, is holding very, very nicely. It doesn't mean this is the beginning of a new trend upward, but certainly lower gasoline prices, lower oil prices in total, and absolutely a weaker U.S. dollar is extremely helpful to underpin the market.
Well, let's talk about the U.S. dollar because you are seeing a bit of a reprieve today. But, it feels like the dollar can't keep it down. We do have the European Central Bank decision expected tomorrow. Could be 75 basis points. When you think about the dynamic between the interest rate differentials, would a 75 basis point hike from the ECB be enough to sort of stop the dollar strength that we've seen?
It would initially, absolutely, because, even the last, should I say the first hike they had was 50 basis points. The market had been expecting 25 basis points. They surprised the market. And at the Jackson Hole meeting, a number of the officials from the ECB echoed the comments that Chairman Powell mentioned. They even talked about front loading. They talked about being aggressive. So I think that the market, the currency market, is kind of sniffing out that they may actually come in with 75 basis points. The rhetoric matters. When they have the press conference. But again, it may not be lasting if then they start pausing and if they then go back to 50 or 25 basis points. But it's enough. It just shows you how the U.S. dollar is underpinned by other central banks. Granted, it's a refuge safety currency. There's no doubt about that. But in this period, it is about the interest rate differential, a hawkish Fed and a Fed that is acting on its aggressive rhetoric.
And part of the Fed's aggressive rhetoric and action, the net effect of that has been higher interest rates, of course, on all bonds, but especially on cash, which is really interesting to me. I cover ETFs, and if you look at the cash-like ETFs that cover Treasury bills, they've just seen billions and billions of dollars come in the past couple of weeks. Quincy, I'd love to hear your view on cash, whether in this sort of equity market, we are seeing some strength today, but it's been very choppy. Is cash a good place to be?
Well, it is. If we look at it in terms of the market, through the market's eyes. So, for example, if you look at the cash that portfolio managers have under management, it's immense. And when that cash starts moving into the market, they pay very close attention, usually when they follow technicals, it's the 200-day moving average. But once that cash starts coming into the equity market, it's going to be powerful. It's going to be a tsunami of money coming in. So in that sense, it's very important. And then, there are others who just want to hold on to it, retail traders, and, start going into the market when they feel that it's not a one-day blip. We don't know where we're going to be tomorrow. I mean, the mentality in this market is such that you don't know what tomorrow has to offer. So once there's stability in the market, I think you're going to see more cash coming in. Others just want to hang on to cash. You can argue with them that, inflation is going to eat it up. People love cash. They feel safe. They feel secure. And that's why money is going into the banks. It's going into money market funds, even with low rates.
I'm already wondering what's going to happen tomorrow if we see, a gain of 1.8 to 2% today in the S&P 500. What ends up happening in tomorrow's trade, but only time will tell. Hey, Quincy, we got a half a minute left right here. I want to get your thoughts on when we're going to know if we're out of the woods. At what point, what are the signs that you have to look for to say, okay, the bottom is in?
One is clearly, look, the market gets the news first. We always like to say that. And when the market feels that the Fed really is on its way to finishing up. I think the market's going to move very, very quickly. But in terms of sectors moving, we saw consumer discretionary today, along with consumer staples doing well. But when consumer staples give way to consumer discretionary, that's a signal. And I always look at the semiconductors. When they can have a stable bid, a viable bid, telling you that the market sees growth ahead.
Quincy Crosby, Chief Equity Strategist at LPL Financial, joining us this afternoon on the phone from Charlottesville, Virginia. Just a couple of minutes to go until the market close. But don't go anywhere, because we are about to be joined by our friends at Bloomberg TV for our Beyond the Bell coverage of the market close, not just here on Bloomberg Radio, but also on Bloomberg TV and, of course, on YouTube. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bossa, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast with Tim Stenovec and Katie Greifeld. We welcome our audiences across Bloomberg Television, Bloomberg Radio, and on YouTube. Tim, interesting rally going on here, as Taylor has pointed out, strongest rally that we've seen since early August, and the breadth of this rally, the strongest that we've seen since mid-July.
Yeah, we just spoke to Quincy Crosby over at LPL, and she essentially said there's a lot to love when you look at today's rally, because you look across the macroeconomic environment and she sees lower gas prices, lower oil prices, and a little bit of, a reprieve in the U.S. dollar strength. That's all helping the market, but it doesn't necessarily mean that it's the beginning of a new trend upward.
Even still, you add that all together, all that good news, and you are seeing volatility drain once again from the markets. I'm looking at the VIX below 25, just very, very muted all summer, it feels like.
I guess that is what makes markets. I think it's interesting as you highlight the bullishness of Quincy Crosby. We highlight maybe some of the more cautious tones, Caroline, that on the TV side that we've gotten. Mike Contopoulos, of course, within the fixed income. Linda Dissel, of course, within the world of equities, saying it's never a good sign when you get these big rallies and then followed by 3 straight weeks of declines, and you just can't seem to hold on to some of these gains.
Yeah, and I think when you talk about whether this sort of has that follow through, the idea that there is a lack of conviction, you see that with regards to the cash positions out there. You see that with regards as well to some of the volume that you see on the individual names. Not quite where we were just a few months, or I should say maybe about a year ago, when there was a lot more enthusiasm out there. We are going to get some earnings after the bell, waiting on GameStop here. But now, as we hear the bells here in New York, Dow Jones Industrial Average looks like it's going to finish higher on the day by about 440 points and change as we wait for these numbers to settle. That's a gain of about 1.4%. The S&P 500 higher by about 72 points, or 1.8%. Going to close right at 39,079.99 here, so just shy here of that all-important round number that some folks keep an eye on. The NASDAQ Composite higher by 2%, or 245 points, and the Russell 2000 not to be missing out here, up by about 2.2% to 1832.
All right, look at that. The Russell, the overperformer of the day today. Hey, Taylor, you talked about breadth. Taking a look under the hood of the S&P 500, 476 stocks moved higher. Only 26 stocks were lower. I have a feeling a lot of those were energy companies.
Let's talk about some of the breadth of this market, Tim. For our radio audience, the sector best performers, the worst performers, it is 99.9% all in the greens. Let's start with some of the winners given the bullishness. Autos, utilities, retails, consumer durables, some of that feels a little bit of an inflation hedge, but all of these sectors are up almost 3% or so on the day. Even the, quote, worst performers are still up about 1%. You still get technology, transportation, sort of the underperformer on the day, but still green. But, Katie, here to your point, energy, it is the worst performing sector and the only sector in the red. You're off 1.2% on the day.
You see all those green bars. I really had an embarrassment of riches when it came to finding gainers. I have to start with Apple, though. Of course, it's the big story today, that iPhone event. It's the far out event. It was about a lot of other things, but of course the headline was the iPhone 14. We also got fresh AirPods Pro earbuds. I know Tim loves them.
I love losing them.
Did they update the pixels on the phones too? Because that's got to be worth a few $100.
The screen is big.
Yeah, definitely. No big price hike on the iPhone 14. We also got an Apple Watch upgrade. A lot of excitement. You add it all together, we got about a 9/10 advance in the shares. Wanted to talk about Tupperware, though. This is so interesting. So buckle up. This is quite a
The
story.
big story of the day is not Apple, it's Tupperware.
I mean, shares are up 19%, so we have to talk about it. This is a really interesting story, I promise. We got news post-market yesterday that Douglas Lane had joined the company as Vice President of Investors Relations and Strategies. Normally, that wouldn't be big news, but actually, shares had fallen 34% over the prior 2 days after a Citi analyst pointed out that the company had quietly eliminated that role late last week. So a little bit of relief from shareholders, perhaps. And I did want to highlight Amazon as well, up almost 3%. Tech broadly was higher today. We did get some comments from CEO Andy Jassy, though. He said that Amazon is hiring at a slower rate than the past few years, but still hiring. Also some interesting comments as we think about the return to the office that the Wall Street banks are trying to engineer. Jassy said that Amazon expects a significant amount of ongoing remote work, and there's no plan for a broad return to work mandate.
I don't know, it does seem...
Just real quickly before we move on, when we talk about the gains and the breadth here, we should point out the S&P, at least, is still well below some of those key moving averages. So a lot of people looking for that. How many 52-week highs do you think we hit here across the tapes, not just on the S&P?
Today?
Today, yes, no.
28.
Tomorrow. 28?
10.
Oh,
10.
okay.
So that includes Ulta Beauty, a couple other favorites like Etfs, but it gives you an idea here that while this rally is certainly to be applauded, it's got a long way to go to get back to where we were.
Okay, well, let's talk about some of the decliners. It was actually slim pickings today, but we got to start with an energy services company, energy and engineering and construction services company.
How many 52-week lows do you think were hit today?
Tomorrow? Many more. 100.
Romaine, today?
Today, yes.
Let's see, 600.
26. There were only 26 stocks down, so...
No, 82. I'm going across the tapes here.
Oh, okay.
I wouldn't even know how to find that. What function are you using?
Use most, right?
Most?
Can you use most to do that, Romaine?
Do you not have a Bloomberg terminal, Katie?
There's one theoretically right in front of me.
All right, Halliburton finishing the day down by 2.9%.
So much for it.
We had Veru finishing the day down by 21%. It's a biopharma company, and shares falling today after it gave up initial gains after the FDA set an October 6th advisory committee meeting to discuss the company's proposed COVID-19 treatment. And then Avaya Holdings Corp, it's a micro cap, it's a communications company based out of Silicon Valley, finished the day down by 4.2%. It's down nearly 90% this year. It came out after the bell yesterday and said it's planning on $250 million in annual cost reductions. And it sees $23 to $26 million in pre-tax restructuring charges, though no word on just how many people are going to be laid off.
Ugly time for Avaya. I tell you what is also having an ugly time is if you try to be long yen at any time, because we are seeing yet further weakness in the Japanese yen, even though we see the finance minister desperately trying to say, look, enough of is enough in terms of this volatility. This is now on track for its worst year on record for the Japanese yen versus US dollar. We know why. This is always about a disparity in what's happening in terms of central bank policy here. Of course, Japan always desperate to get inflation, whereas the US desperate to try and crack down on it right here, right now. In terms of our FX vertical for our radio audience, I'm looking at really a sea of green versus US dollar. First time in a while, we've seen King dollar on the lower side, and we therefore see Swiss franc get a bid. We've seen euro up more than a percentage point ahead of the ECB that comes tomorrow. Will we get that giant hike coming from the ECB? And lastly, I know we've got some breaking news, but WTI and Brent, really this is the story of the day, off by more than 5%. No wonder energy so underperformed, Romaine.
Yeah, we're keeping an eye on earnings. We've promised you GameStop earnings results, I should say. Those 2Q numbers coming in, net sales, $1.14 billion, a little bit shy of what the street was looking for. The average consensus estimate out there was for $1.28 billion. Going to dig through this release just now, but you could bet, to be sure, there are no earnings. There is another loss here, the 2Q loss coming in roughly about 36 cents a share. Someone double check me on that here. We'll have to check to see how that matches up with consensus estimates. And if you're looking for guidance in this statement, particularly with regards to some of the long-term planning that this company has for turning it around, well, you're not going to find it, at least not in the
press release is one page long.
Yeah.
I can't.
There's an inventory number.
And this is a trend with them.
It's
They've been doing this every quarter. We get, I mean, I know there are a lot of people that have faith in Ryan Cohen, but the idea is that do you have a true articulation of sort of what the plan is to actually turn this company around?
I don't even have a statement here from the CEO. They talk about inventory is up. Caroline, of course, is a company focused on maintaining in-stock levels. They talk about your favorite, the NFT marketplace, to allow gamers and creators to come in and of course modernizing
What does
and
it tell you
strengthening
when you
the
see that
systems.
inventory level go up? 734.8
They're saying
million
this
in the
is a
inventory.
good thing, though, because
That's
of
up from
supply chain.
596. Why?
Because actually they have games,
Hasn't Target, Brian Cornell, haven't a lot of these other bigger retailers already thrown water on that narrative? The idea here that may have been true several quarters ago, but right now it's a totally
And who's
different
gaming right
environment.
now? Aren't we all apparently going out and having experiences at the moment, Katie?
It's a great question. I really don't know how to interpret this one-page press release as we've been talking about. It looks like the market doesn't really know either.
There is
If you
going to be
look
a
at the
conference call.
line,
But
I
the
look forward
conference
to
call is the
that.
same
Yeah,
every
remember the
quarter,
last
which is
conference call they had?
Yeah, no questions,
Yeah.
no color,
For all
no
of the four
articulation
analysts
of the
that
strategy.
are on this stock, of 3 sells and 1 hold, not a single buy on GameStop.
Well, how do you?
My favorite line, Romaine, they talk
Mm-hmm.
about how they have about $900 million in cash.
Right.
And then an unsecured loan with the French government's response to COVID-19.
Okay, I don't know what that's about. But to just real quickly to Caroline's point too, I mean, the idea that you have so little coverage on this, I mean, this is kind of a black box right now. So either you just have a lot of faith in Ryan Cohen and what he's doing, blind faith, I should say, or you just move on. I guess you find something else. And we're actually going to talk about this on Triple Take in about a half an hour's time. We're going to talk about meme stocks and really focus a little bit on GameStop and sort of what's there.
Quick headline, if I can get in there.
You can do anything.
Second quarter proceeds from sale of digital assets were $77 million. So I don't know. That's a plus.
Conference call that begins at 5 p.m. Eastern.
All right. Well,
Let's
maybe
do it.
we'll get a little more insight. But
Relatively new
kind of
CFO as well
doubtful we
since
will.
July, right?
What was that, Caroline?
Relatively new CFO as well,
Yeah.
right? Only since July.
Yeah. The question is, do we hear anything about this strategy? All right. Well, we're looking forward to Triple Take coming up in just a few minutes. We're going to go back to our studio here at Bloomberg Radio. That is going to do it for our cross-platform coverage of Beyond the Bell on Bloomberg TV, Bloomberg Radio, and on YouTube. We'll be back tomorrow, same time, same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You ready for that GameStop earnings call?
I'm so ready.
Yeah,
Are
it's
you
going to
in?
be, I mean, like the last 4 or 5 quarters have just been so short.
So short.
The earnings calls.
I will point
No
out
questions.
shares are up 1.5% right now. Well, now they're down. No, man, the line is really moving around.
Yeah, everybody's confused. I would say we're going to dig into these numbers, but there's not really that much to dig into, so we're going to have to wait for the call. Let's get to world and national news with Nancy Lyons in Washington, D.C., who's standing by. Hey, Nance.
Thanks, Tim. A new report from the Washington Post says among the documents seized by the FBI during its search of former President Trump's Florida home was one concerning a foreign government's nuclear capabilities. Joseph Cirincione is a nuclear weapons expert and says this raises alarms.
If there was a document of this level that I needed to store, it would be in a locked safe. And if I had to transfer it to somebody, a special courier would have to come and take it and put it in a locked bag to transport it.
Cirincione says release of the document could jeopardize the ways and means the U.S. acquires such information. President Biden had special guests at the White House today. He invited Barack and Michelle Obama to unveil their new White House portraits.
President Biden recalled 8 years of work and family connection.
With Barack as our president, we got up every day and went to work full of hope, full of purpose, and excited about the possibility before us. You both did it with such grace and such class.
You've built on and gone beyond the work we all did together. Joe, it is now America's good fortune to have you as president.
But it was Michelle Obama who cited the tradition that puts her alongside Jackie Kennedy and Dolly Madison, and the tradition that when their time was up, they moved on in a peaceful transition. In Washington, Irv Chapman, Bloomberg Radio.
Former White House strategist Steve Bannon plans to surrender tomorrow to face criminal charges in New York. Sources say this is over an ongoing investigation into whether he defrauded donors to We Build the Wall. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio And we got ourselves a story that hits pretty close to home for me. It's among the most read on the Bloomberg terminal. We've been talking about California over the last few days quite a bit in the context of the drought, the energy crisis that's happening, the grid crisis, and of course those high temperatures. Kim Chipman's got a story out about how wine country in the northern part of the state, it's nearing a no-return point when it comes to the climate crisis.
This actually hits close to home for me as well.
Yeah.
I like wine.
Oh, okay. I didn't know where you're going with that.
No. So California's wine country, including the famed Napa and Sonoma valleys, faces a climate crisis so dire that it's posing an existential threat to the future of the state's industry. You've had these grapes. They've been hit with one extreme after another. This year's season started out with a deep frost that iced over the green buds. It nipped them right off the vine. For the crops that did survive, that freeze quickly gave way to drought and to heat.
And just in the past week, record-breaking temperatures baked parched vineyards. Then there's the ever-present threat of wildfires and smoke damage as well. Katie, I've been thinking a lot about this. I am a Californian. I grew up there.
Really?
I love the state. I know I talk about it all the time. I would love to live back there. I mean, what's not to love about California? You can go surfing in the morning and mountain biking in the no depending on where you live.
I feel like it lacks grit, you know?
It does not lack grit.
There's not enough
it's
trash.
a huge economy.
Uh-huh.
No public transit, really.
Yeah.
But it's so hard to think about. And look, there's so many people who need homes there, and there's so much demand to live there.
Yeah.
But I think to myself, what about with the drought? What about with the water crisis and the power crisis? That is a part of everyday life for people.
Well, bringing it back to wine specifically, there's been a lot of hand-wringing over the years about this climate crisis. Again, specific to the wine industry, it's $45 billion.
Yeah.
Experts are starting to say now that the vineyards, they're already near the tipping point.
It's really sad. I mean, it's not just, this is also a part of the country where it's a huge wildfires in the last few years as a result of power lines, too.
Yeah.
Check out this story and more on the Bloomberg terminal. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
First, the news after the bell. GameStop reported a loss for Q2 that increased from the same period last year. However, the latest results were better than what the street had been forecasting. And right now, shares in GameStop up more than 13% in the late session. Now, during the regular session, the equity market rallied. We finished very near session highs. Some of this price action was driven by a collapse in the price of crude oil, WTI dropping below $82 a barrel. And that helped to kind of ease some concern that we will see future aggressive rate hikes from the Fed. On top of the oil collapse, the Beige Book survey from the Fed said that U.S. economic growth prospects were weak in the latest period, and they are set to slump further in the next year. And at the same time, price growth in some of the districts showed signs of deceleration. We had a move lower across the yield curve today in yield terms. A 10-year Treasury last quoted at 327, a 2-year at 343. In terms of equity market action, the Dow was up 1.4% today. S&P 500 up 1.8%. NASDAQ comp higher by nearly 2.2%. Shares in Apple picked up nearly 1% today as the company unveiled the iPhone 14 line along with a fresh slate of smartwatches and new AirPods. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Really appreciate it. Let's talk packaging. You don't think about it much, probably each day, if you don't work in the industry, that is. But how do you think food, drink, personal care products, pharmaceutical products, medical products, and more get from the factory to you? Well, they turn to companies like Amcor. It's an $18 billion company that focuses on flexible and rigid packaging. They do closure, services for food, pharma, beverage. They do specialty cartons and more. Really pleased to have with us Ron Delia, the Managing Director and Chief Executive Officer of Amcor, joining us this afternoon on the phone from Deerfield, Illinois. Ron, how are you? We're going to work to get Ron's line working right now.
Yep, very.
Oh, good.
Very
We got
Thanks,
you.
Tim.
Hey,
Yep,
good.
All good.
All good. Awesome. Good to have you with us. Hey, I want to talk a little bit about what you see with the economy, because you've got just a great seat in terms of every industry that you work with. Are we seeing a softening anywhere when you look across the world, when you look across different segments, whether it's food, beverage, pharma, medical? Just give me an assessment of what you see from where you're perched as CEO of the company.
Yeah, look, we have a unique position and a unique perspective because the packaging that we make is essentially all for consumer staples. So all of our sales are into some of the end markets that you mentioned: food, personal care, beverage, and then the healthcare segment. And we're operating in over 40 countries around the world. So we're very geographically diversified, and our end market exposure is quite defensive. And so we tend to be fairly resilient through economic cycles. And what we're seeing so far is the consumer remains robust as it relates to the staples that we're providing packaging for, notwithstanding the price inflation that consumers are wearing around the world.
So consumers remain resilient. We've heard that from some executives in a few different industries, so definitely a theme there. I want to talk about the state of the supply chain, though, because for so long it seems like the price of everything physical was just marching higher. Where do we stand now?
Look, there's no question that the last, I'd say, 12 to 18 months have been just littered with a number of supply chain disruptions of every kind. We've had a number of different shocks to our supply chain, whether it's shortages of raw materials or difficulty securing enough labor, freight availability, et cetera. I do think that for the most part, our supply chain is normalizing. Now we're procuring commodity raw materials like aluminum, like paper, like plastics, and we turn those products into packaging for the consumer products and healthcare products that I mentioned. And I would say that we're seeing a normalization. We're seeing a more ready access to labor. We're seeing raw materials come back on stream. So I would say there's light at the end of the tunnel.
Hey, that's great to hear. I mean, really optimistic look. And again, you guys have this unique perch. And just to give listeners and viewers an idea, we're talking about companies like Pepsi, Kraft Heinz, Nestle, Tyson, Cargill, Unilever, Anheuser-Busch, and more are your customers. So it really runs the gamut. What about when it comes to sustainability? I know this is something that's important to your company, but also important to consumers. So, it's difficult, I think, for a lot of Americans to recycle stuff because of the way the recycling system has changed. So even if you're putting stuff in recycling, it's not necessarily getting recycled the way that consumers think it is. How do you guys think about sustainability? Because you're essentially creating trash.
Well, look, we see it a bit differently there, Tim. We believe there's a role for the packaging that we provide in that everything that we make is touching or holding a consumer product. It's touching and holding medicine and medical devices. And so we just believe that there's fundamentally a role for that sort of packaging going forward. We're not making outer shipping containers or things that are often associated with excess packaging. We're making packaging that is extending the shelf life of food, allowing for broader distribution of medicines, allowing for sterilization of things that go into the operating theater. And so we just fundamentally believe there will always be a role for that sort of packaging. What's happened over the last decade or so is that consumers have come to expect more from that packaging. They've always expected functionality and convenience, lightweight packaging that can be reclosed, et cetera. And now they want to know that at the end of the life, end of the use of the package, it can be disposed of in a more environmentally friendly way. And for a company like Amcor that's competed for decades on innovation, that creates an enormous opportunity for us to differentiate and to create more value for our customers, who are those big brand owners that you mentioned.
And Ron, please forgive me. I mean, I meant trash in the most, respectful term. I wasn't literally calling your product trash.
You're
Go
making
ahead,
trash. Ron, I do want to talk about the global reach that Amcor has. You have sales in 2022 that are coming from 43 countries, generated from 43 countries. And with that kind of global reach, what does the U.S. look like versus Europe versus Australia, for example, in terms of both consumers and some of these supply chain disruptions that still contending with?
Well, look, the supply chain challenges over the last year or so have been pervasive around the world. They've popped up in different places, but I do believe that the worst of that is behind us. Those are abating. Consumers in those markets, in particular, are looking for all the things that you would expect. They continue to look for increasing levels of convenience. If you think about some of the segments that are important to us, coffee packaging, pet food packaging, these are things that consumers now expect greater functionality from and greater convenience. We now are the exclusive supplier of Nespresso capsules, as an example, and we've seen coffee consumption gravitate from brewed coffee, where we would sell.
And certainly those are you can see packages of those being recycled as well. Hey, Ron, really appreciate you taking the time. Ron D'Elia, Managing Director and CEO of Amcor.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Kitty Greifeld in this afternoon for Carol Massar. Hey, we got a great guest coming up to round out the show. David Livermore is the founder of the Cultural Intelligence Center, also the author of the new book, Digital, Diverse, and Divided, How to Talk to Racists, Compete with Robots, and Overcome Polarization. We're going to have a good chat with him in just a few minutes, but there's a lot of action happening in the after hours. Doug Krisner, give us an update.
Begin with GameStop. A company reported a loss for Q2 that increased from last year, but it beat the estimates for the street. And then on top of that, we know now that GameStop has entered into a partnership with FTX, the crypto trading platform. So now a little bit of the bad news. GameStop was sued today over allegedly secretly wiretapping the chat feature on its website. The stock right now well off the best level in the late session. We're higher right now by about 9.5%, but these shares had traded higher by more than 13% earlier. It was a positive day for the equity market as we come back from a three-day weekend. We finished very near the best level of the day. Primary drivers seem to be a collapse in the price of crude oil, with WTI dropping below 82 the barrel. This seemed to, at least in the short term, alleviate some concern about the future potential aggressiveness from the Fed in terms of rate hikes. Right now, we're trading 81.90 in the electronic session. Dow Industrial Average today higher by 1.4%. The S&P today up 1.8%. NASDAQ comp climbs nearly 2.2%. A move lower across the yield curve in yield terms. 10-year Treasury last quoted at 327, a 2-year at 343. And with that pullback in yield, dollar weakness with the Bloomberg Dollar Spot Index down 0.4%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Hey, Doug Krisner, thank you so much for that update. Really appreciate it. Well, it's no secret that we live in a really polarized world. I was reminded when I was doing research for our next guest about a poll that I saw last month from the Pew Research Center about how Republicans and Democrats are increasingly critical of people in the opposing party. Here's a headline from this. Majorities in both parties view members of the other party as more immoral, dishonest, and closed-minded than other Americans. This according to the Pew Research Center. It's a perfect time to bring up our next guest, David Livermore, the founder of the Cultural Intelligence Center, also the author of Digital, Diverse, and Divided, How to Talk to Racists, Compete with Robots, and Overcome Polarization. He joins us this afternoon via Zoom from San Diego. So if you're watching on YouTube, you'll see him right there. David, how are you?
I'm great. Thanks, Tim.
Hey, I want to start with cultural intelligence, the concept of cultural intelligence, because it's actually a scientific model. For people like myself who aren't familiar with it, explain the concept and how it can help us see people who have opposing views.
Yeah, thanks. So you're certainly familiar, as are all your listeners, with IQ, intelligence quotient. We all heard a lot about that for many years, and most of us are pretty familiar too with emotional intelligence, the scientific measurement of our ability to manage and detect the emotions of ourselves and others. And really, our work in cultural intelligence picks up right where emotional intelligence leaves off and allows us to have that same kind of practical social interaction skill when we're dealing with someone from a different background. And as you may know, this typically has been applied globally. How do I, as a North American, interact with a counterpart in Asia? But as you mentioned in your lead-in, increasingly we're seeing that this is a skill that can actually help us bridge the divides within the U.S.
So to that point, is cultural intelligence then just EQ, or what is the nuance there?
Yeah, thanks, Katie. Certainly, there's a lot of correlation, and we've looked at it in the research, but emotional intelligence detects whether or not predicts whether or not you can actually interact with someone from a familiar cultural background. So we read the emotional cues. Oh, the silent treatment, that means this. They're looking me in the eye, that means this. And with cultural intelligence, it helps us understand that we may be misreading cues if it's coming from someone who has a different orientation. So certainly appropriate to see similarity, but it takes our emotional intelligence a step further when we're viewing someone that we may perceive, as Tim just mentioned, as immoral and dishonest, and says, hang on, wait a second, maybe I'm reading too much into the raised voice or the silent treatment. It may mean something entirely different.
But maybe it's not just about the silent treatment or the raised voice. Maybe it's about somebody's, fundamental beliefs that, let's say that, and we live in a world that's more polarized than in previous generations. I mean, this is no longer like Jimmy Carter versus Ronald Reagan territory here, right? You have a group of people who deny that the 2020 election was free and fair, and, are essentially willing, for lack of a better term, to die on that hill. Does this method allow people who have views that are that strong actually, be able to communicate and have real conversations with people who don't necessarily believe that?
That's my hope, and that's the early findings that we're seeing from the research on it. So I'll be the first to say it's not a silver bullet, it's not a panacea, but as you know far better than I, living in the news industry, I mean, pick the week and we have a new divisive issue. And as you noted, we've gone from just having disagreements about different ideas to now I can't even view you as a fellow human being. So I think what the cultural intelligence work does is similar to when I'm working with my counterpart in Iraq or China. I have to slow down first and say, okay, wait, but you're my fellow human being. How do we start with that? And cultural intelligence allows us to do something as simple as when someone makes a claim about the election not even being legitimate, to stop and say, well, would you be open to a different perspective on that? And if they aren't, then yeah, there's probably no point in exercising any more breath. But I find typically people will at least give nodding assent. Okay, sure, give me your different perspective on it. So I'm hopeful that it at least helps us to de-escalate some of the hyper rhetoric and emotion, to actually find that maybe we have a little bit more in common than we think we do.
Fold this into the hybrid environment that we live in right now, between working remotely and interacting in person. It feels like it's harder to read someone and exercise EQ over Zoom. And we only have about 45 seconds and then we'll be back.
Yeah, so exactly. I think the digital context further exacerbates this, and it's why emotional intelligence is even harder to exercise when you're trying to read the cues of someone just through a Zoom call, especially if it's a friend of color or a colleague of color who's just heard about the George Floyd murder, and now they have to suddenly jump on a Zoom call and interact about next week's project. So these things are hard enough to do in person, but I think you're right, Katie, that the hybrid environment amplifies the challenge.
Well, sit tight, David, because we're going to do some news, and then we're going to come back with more. David Livermore is the founder of the Cultural Intelligence Center. He's also the author of the new book. I have it in my hand right here, Digital, Diverse, and Divided, How to Talk to Racists, Compete with Robots, and Overcome Polarization. Really want to hit on the other side here, political ramifications here, if politicians are going to take any lessons from this and be less divisive. And then also, of course, the automation element here, and talking about the future and competing with those robots. First up, though, let's get to Washington, D.C. now for a check of the latest world and national news. For that, we turn to Nancy Lyons. Hey, Nance.
Hey, Tim. A tradition has returned to the White House. Today, Barack and Michelle Obama were back at the residence for the unveiling of their official White House portraits.
President and Dr. Biden, Vice President Harris, and Second Gentleman Emhoff, thank you so much for your hospitality. Thanks for letting us invite a few friends to the White House. We will try not to tear up the place.
The portraits of the Obamas will likely be placed in the cross hall of the White House, which is where the latest sets are usually displayed. New concerns are being raised after a Washington Post report that a highly sensitive defense document was found during the August search of former President Trump's Mar-a-Lago home. Bloomberg's Washington correspondent Anne-Marie Hordern has details.
It says a document describing a foreign government's military defenses, including its nuclear capabilities, was found by FBI agents who searched former President Donald Trump's Mar-a-Lago residence and private club last month. According to people familiar with the matter, some of the seized documents detail top-secret U.S. operations so closely guarded that many senior national security officials are kept in the dark about them. So we're talking about documents that the clearance levels, the president, and maybe the cabinet.
Bloomberg's Anne-Marie Hordern reporting from Washington. Top health officials are pleased with the progress against the monkeypox outbreak. Speaking to reporters, monkeypox coordinator Bob Fenton says the strategy of targeting the most at-risk communities with vaccines appears to be working. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld in for Carol Masser this afternoon. Hey, we're going to get back to David Livermore in just a few minutes. I did want to hit this story, Katie. Came across the Bloomberg this morning. Anything about Manhattan real estate and prices kind of becomes a read spike, which is the term we use here internally. Do we see that externally too? I don't know.
Sometimes it means read spike.
It means a lot of people are reading it.
Yeah. There are some metrics behind that. But yeah, anything Manhattan real estate, it's like catnip. And this particular story, Manhattan home sales under $1 million sagged well below their pre-pandemic levels this summer. As rising interest rates cut into buyers' purchasing power and sidelined some potential customers. We've heard this story before.
We have, but this is a specific segment of of homes here in Manhattan, which I think you'd be hard pressed to find. The number of properties for sale under $500,000 that entered contract in June, July, and August was 29% less than the average number of transactions for that same period in the decade leading up to the pandemic. That's according to an analysis by the brokerage firm Serhant. For properties priced from $500,000 to $1 million, activity was 15% less than a pre-COVID average. A big part of this has to do with mortgage rates, Katie, moving higher.
This is a story across the country, not just Manhattan, of course. Home buyers across the country, they've been grappling with that rapid rise in mortgage rates this year. That's been fueling this affordability crunch that's among the worst seen in decades. For those keeping track at home, the average rate on a 30-year fixed mortgage hit 5.66% last week. That is up from 3.1% at the end of 2021.
The reason I said this is a specific segment of homes here in Manhattan is because those are the least expensive homes, even though on a national average, they are still incredibly expensive. The median price of a Manhattan home entering contract during this time increased 1% to $1.159 million. That was in June, July, and August from the same period last year. Inventory, though, moving faster than last year. Homes selling after an average of 144 days on the market. This story by Jennifer Epstein. Check it out on the Bloomberg Terminal and more real estate coverage at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had a rally in the U.S. equity market today, and the driver for much of that price action was a collapse in oil prices. That, in turn, helped to ease concern over the possibility that future rate hikes from the Fed would be super aggressive. WTI broke below $82 a barrel today. Yeah, some of this has to do with demand destruction, especially in China. But the drop in oil sent yields across the Treasury curve lower, with a 10-year falling by a little more than 8 basis points, last quoted in New York at 326. On the shorter end of the curve, the 2-year was down about 7 basis points to 343. In terms of the equity market, we had the Dow rising 1.4%, the S&P up 1.8% today, and the NASDAQ comp climbing more than 2.1%. Apple unveiled the iPhone 14 line today, along with a fresh slate of smartwatches and AirPods, and it didn't raise U.S. prices during one of the worst years for inflation in decades. Apple shares rising today by nearly 1%. And then after the bell, we heard from GameStop, mixed results for Q2, but the company is leaning into a strategy toward non-fungible tokens by announcing a partnership with the crypto exchange FTX. GameStop shares right now higher by just about 10% in late U.S. trading. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. I want to get back to David Livermore. He's the founder of the Cultural Intelligence Center, the author of the new book, Digital, Diverse, and Divided, How to Talk to Racists, Compete with Robots, and Overcome Polarization. He spent a lot of time consulting, traveling around the world. He's spoken to executives at companies like Alibaba, BMW, Google, and more. So he's got a really good idea of what the modern workplace is missing and also what it's trying to strive for and trying to achieve. David joins us this afternoon, once again on the via Zoom from San Diego. David, that's where I really want to start is how we apply these lessons professionally and we think about ourselves in the workplace. I don't want to get to the automation yet and talk about robots yet, but I want to talk about using these lessons to become, better employees, to become better at our jobs. How can we do that?
Yeah. Well, on the one hand, the workplace is where this becomes a really interesting dynamic because it's perhaps the one place where we don't have the option to run into our echo chambers and just say that I'm going to do things my own way and not interact with anyone who thinks differently than me. And we see non-examples from what groups like Basecamp tried a year or so ago when they forbid any discussion of sensitive topics and didn't work real well.
Yeah, this is the Silicon Valley startup Basecamp.
Yeah.
They make worker productivity software.
Right, and what was it? Like something like 30% of their workforce resigned immediately when they told them you can't talk about sensitive topics at work. So somehow, I think the organizations that are doing this right are creating space for it, but also not just sitting around and having conversations about, the election or Black Lives Matter or reproductive rights or whatever the topic tends to be that week, but instead saying, hey, we're all oriented around some kind of similar goal that we're trying to accomplish in the workplace, and then using the diverse perspectives to actually better accomplish that goal. So I think it's kind of this dynamic tension of allowing space for some of the conversation to exist around some of these potentially polarizing topics, but not getting stalled in the gridlock and telling people you're going to have to learn to work and adapt with other people who feel differently than you so that we can meet the milestone that we're all trying to accomplish.
Do you have any examples of corporations who are really nailing it when it comes to using cultural intelligence and creating space for those diverse perspectives?
Yeah, great question, Katie. And of course, with the large Fortune 500, it's always scary to share one because the minute I do, there'll be a non-example come up in the news. But a couple that come to mind. So Tim mentioned that we've done quite a bit with Google, and Google was kind of leading the way in this a number of years ago where, they've had their 20% principle where several people within Google are given 20% of their time to innovate anywhere within the company. But when they actually got engaged in recruiting people from the Asia Pacific market, they would interview people and ask them, if you were hired, how would you use that 20%? It's kind of like, whatever the boss told me to do. And to Google's credit, they knew they were going to miss out on a core part of their corporate DNA if they suddenly said, okay, we'll get rid of that principle here, but also knew that they had to kind of adapt the way that they were going to work with individuals who might be more hierarchical or risk averse. So that may seem a bit adrift from the question in terms of polarization, but then I've watched them over the years then apply that more broadly to then how do we create space so that our employee resource groups, these groups that many organizations have that allow different groups from marginalized groups to find affinity, to be more than just a support group, but to actually be a source of education of here's some of the things that you want to understand about
Connection lost.
Black tech, or about your gay colleagues who are trying to find a way, even if they're working in Silicon Valley in a very progressive place socially, some things that they might be encountering that you aren't. So that's one example that comes to mind.
Hey, David, it's hard to quantify this stuff, but in the wake of George Floyd's murder in 2020, we had a lot of companies really look internally and say they were going to make big changes.
Right.
And just based on your own travels and what you're talking to executives about, we don't hear that as much right now. And I'm wondering if you think that some of the changes that they announced, are those actually sticking? Like, are there cultural changes happening at these companies in the U.S. and around the globe?
Yeah, you're going to hate this answer, but it depends, right? Like, what company are we talking about? So
feel free to name names.
Sorry, what's that?
Feel free to name names.
Well, I was going to say that there are many in the diversity space that are very discouraged, saying it was all about optics. They put out their social media post and now it's done. On the other hand, I'm sitting with some people in the C-suite who are like, God, no matter what I do, it's never enough. And, far be it for me to be the guy who's going to defend the well-paid executives, but sometimes I'm trying to be a dissident voice with some of the diversity spaces saying, but do you understand what else is on their plate? Like the potential lawsuit that they're fighting off, or these supply chain issues that one of your previous guests was just talking about. So I'm actually optimistic. I think the conversation has moved forward. I think there's some great strides that are being made. Yeah, some have dissipated and they've walked away from it. Some are very nervous that it's presented by the diversity experts as an ongoing journey that's never done. But I think for the most part, it's here to stay. There was a course correction that happened, and that, particularly as we look at things like quiet quitting and the Great Resignation, that particularly millennials and Gen Z are saying, if I have an option, I'm not going to work for a company that's not committed to this.
And David, I want to go back to the title of your book, because the sort of first item in that list there is how to talk to racists. And how should one do that in a professional workplace?
Yeah. Well, it's definitely not saying you're a racist, right? Because I've never seen that result in someone going, oh, you're right. Thanks for pointing that out.
Gosh.
And I should also qualify that I'm not assuming any one particular group there. There's times I'm racist and I need to be called out on it. So I would say for me, for the most part, it's engaging in kind of a conversation, kind of using something like that question I used before, like, would you be open to a different perspective on what you just said? And specific example, I was just recently talking to a professional colleague who was just informally catching me up on some things and some people that we both knew. And he made the comment, yeah, I don't know if you heard that so-and-so just married a woman from South Africa. She's black, but she's beautiful. And I'm like, oh, excuse me? She's black, but she's beautiful? And we have enough personal relationship alongside our professional one that after a moment I just said, hey, can I just point out to you something that you just said? And he responded as many of us probably would. Initially, he was very defensive, like, oh, what? Are you going to use me as an example now in your next book? And I'm like, hey, that's not my point.
And you said yes.
No, but in an interview on Bloomberg Business Week, I will.
Radio.
Yeah. Hey, right. David, we unfortunately have to leave it there. We're out of time, but this has been a great conversation. We really appreciate you taking so much time and joining us this afternoon on Bloomberg Business Week. David Livermore is the founder of the Cultural Intelligence Center. He consults with companies around the world. He's also the author of the new book, Digital, Diverse, and Divided: How to Talk to Racists, Compete with Robots, and Overcome Polarization. The book is out now. That is going to do it for Bloomberg Business Week. A big thank you to Katie Greifeld and the entire crew here at Bloomberg Radio.